Boom! What is up, everyone? Happy Tuesday. Welcome back to Benzinga Live. We're going to be joined here in a minute by David Green for some live trading. And boy, do we need it because the markets are crazy today. I don't know if you guys saw what was going on with VXX earlier, but we'll talk about that. Overall, we're still holding up. The Qs are up almost 2.4% right now. So the Qs are ripping. I'm excited to get David Green on, see what he's trading. Let's go ahead and start the show. We get my
This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a
breaking news. All right, DG, how you doing this morning?
What's up, everybody? How's everybody doing?
Good, man. How are you?
Doing great in this wackadoodle crazy thing we call a market.
Yeah, I was so confused earlier because I didn't see the headline yesterday about VXX Barclays not issuing any more shares for it or whatever the news was. But I was watching the markets go up, and I was looking at VXX, not the actual VIX, and I was like, how is VXX going up, but the markets are going up too? I was so confused.
Yeah, exactly. They took away the shorts also, so nobody could short the stock anymore. It's the first time I've seen that in 50, I don't know, since I'm trading, that they took the shorts away from this. So I think both not issuing shares and the fact that you couldn't short anymore made this thing go from whatever it was, $30 all the way up to $41. Now, we just gotten a little trade right here, guys, in Microsoft. We just shorted a tiny bit on this pivot point at 283.63. So, guys, we'll have like a 50-cent stop on this. The market is so incredibly strong today. Don't ask me why. I have no idea. Spiders are coming up to a little 424 resistance level 2 on a daily chart. Market's just very strong. I mean, I think they're talking about peace talks in Russia. Again, quite frankly, we don't care what the news is. We just got to trade what they put in front of us, right?
Yeah, that's it. I mean, today it's strength. Like you said, we're almost we're up more than 2.5% on the Qs right now. I don't know when the last time we had a 2.5% day on the Qs was, but it's felt like a while.
I have no idea, right? It's just crazy. Insane. All right, Microsoft, guys. Again, let's try to cover a little if we get to, where are we going? We'll call it 263.40, guys, on a pull, 283.40 on a pullback if we get one. And again, this is the kind of market where you cannot get stubborn in anything. You know, there's no, if your levels don't work, you just got to get out of your trades very quickly because the market's just, it's been incredibly hard to trade this market for the last month. I don't know if anybody out there is having the same kind of problems, but it's just been hard. The volatility is insane. Yeah, go ahead, Alex.
The volatility has been insane. I don't know if you've seen it. The AMC this morning announced they're getting into a gold miner. People in the chat are asking about AMC.
Yeah, we'll take a look at AMC. I don't know what this guy's talking about, to be quite honest with you.
I saw that. That was like the first thing I saw on Twitter this morning. I said, what am I reading? Did I wake up in a dream?
Yeah, they bought like $1. The stock was $1.50 or something, or $1, something like that.
Oh, my God.
I mean, insane. I don't know. The guy's trying everything he can on God's green earth to somehow get this stock to go up.
So, yeah. And someone asked in the chat why we're so down. We're not down on any stock. Benzinga is not down on any stock. We just look at stocks, report what's going on.
Guys, covering the Microsoft here.
I'll give my personal opinion. It's clear that he's, that Adam Aaron is doing whatever he can to try to get retail investors back interested in his stock. But the bottom line is it hasn't been going up for the past, year?
Yeah.
6 months?
I mean, ever since the stock hit, whatever, $62, $64. We'll try to spy this guy. What is NVIDIA doing? Sorry, guys. We're just getting a couple of trades set up here. So I got a chart up of the spies, guys, right? And we know it's been very, very strong. So even in Microsoft went 25 cents against us. We just took the trade off because things are just too strong right now. We're coming to a daily level in the spiders now on this trend line. That is about 424.10. So we'll see if we have a little hesitation when we get up there. We have a little shorty out there. Let's make it 424.05. One thing that we've learned, guys, is Don't try to figure out why things are doing what they're doing. They're doing them. So we just have to react to what's put in front of us. That's it.
Exactly.
All right, let's look at the AMC. I know everybody wants to talk. Look, I've been talking about AMC since it was 60, 50, 40, 30, 20, and now 13. And I don't see how they're going to get out of the mess that they're in. They have $6.5 billion in debt. They have a couple.
Just like anything else, can this get to a point where it gets cheap enough that I mean, like, would you start trading it to the upside if it hits, say, $10 and bounces from there?
No. No. This is the bottom line. I don't like the stock. I don't think it's worth anything. All right, NVIDIA, guys. What do we got? 229 up there? Yeah. I mean, this is a market where you just got to be long everything on pullbacks today anyway. Everything is very, very strong to the upside. You just got to be looking to buy pullbacks unless something really stupid happens. Well, you guys know how I feel about Apple, right? Apple's just a great stock to have and put it away. Yeah, listen, you can't say that the guy's not trying in AMC, right?
Trying whatever he can.
I just think it's a dead medium, you know? When they have a big blockbuster or something, people go to the movies and they watch it, but I don't know. Let's see what happens if we get the spies up here. There's so many other things to do rather than going to a movie and spending $50 on a ticket and popcorn.
I will say I do know a lot of people going to see that new Batman.
I know. They made like $300 billion or whatever it was over the weekend. Something sick. And we're getting a little pullback now and stuff, but nothing significant. And look at Microsoft now, guys. See, here's where you can never get stubborn when you're trading, right? Normally, I'll give something 50 cents or $1 stop, but Microsoft just had no pullback, so we lost 25 cents on the trade. We'll look for another level to get in. We got to start looking at dailies now, right? Microsoft right now is on its little daily at 284.30. For those of you who are watching, everything we do here is just based on technical analysis. So we use our charts and our moving averages and stuff to try to figure out places to make our trades. Microsoft 286.43 is the 1 hour. All right, I like that. Let's go to the 1 hour chart. And we can see right there we have a 200 EMA at 286.43. That works, Jim, if we go in that direction. Yeah, that's another thing, too. Let's talk about this for a couple minutes, guys. If things aren't going well and you find trading very, very difficult, take a break. There's nothing wrong with that. Take a couple of days off. Walk away from it. You know, I know for a fact, because I'm doing this 35 years, that this too shall pass. I mean, it's going to. You know, nothing lasts forever, but the volatility that we've had, the 1 minute the market looks spectacular, and the next minute, you know, the market's down 600. Look where the market was this morning, guys. Pre-market, the futures were horrible last night. The spiders this morning at 5 o'clock in the morning were $413.61. $413.61. We've gone up. The market's up 1,000 points from that level. 1,000 points. I mean, in a matter of a few hours. So,
hey, I'll take it. I'll take it, David.
Yeah, listen, knock on wood. Let's keep going from here.
Yeah, yesterday we were at one point, the spies, we were up a full percent and we ended up giving it all back. But today's different. I mean, today is
all right. It's 11:38. So far today is different, right? Let's see what happens. So
far today is different. Yeah, so far today is different.
Exactly. I mean, let's hope we hold. Look, this market is set up for a massive rally if we get some kind of resolution in you know, with Russia and stuff. Tomorrow's the Fed too, right? So tomorrow could be another wackadoodle day. I don't think they're going to say anything other than we're raising 25 basis points. If they come out with the language and then say, okay, we'll be a little dovish and we'll see how the economy is and everything relax, I think that's a catalyst to really shoot up. If they come out and say, oh, we're definitely raising 6 more times in the next 6 months, then maybe it's not so great. But I think part of the rally that we're seeing today is that everyone kind of expects what they're going to do tomorrow. And, you know, if it comes out status quo, we should be all right. You know, all things considered, guys, where are we now? About 12% off our all-time highs, something like that. You know, I think between 10 and 13% we are off our all-time highs. Which, if you think about it, right, if you put it in context of the bigger market, what were we up 50% in the last 2 years, 25% last year? right, for the year. Those are spectacular years, when on average, 7% is probably the average in the S&P for 150 years. So, we're coming off a spectacular year, and we're giving some back, and that in the face of everything that's going on, right? So net, it's not that horrible at this moment, right? At the moment. Why are we trying to short? Hold on one second. Let me answer a question I see. The S&P is up 100 handles. The market itself is up 1,000 points. Why am I shorting? I'm not looking to short Microsoft per se, right? I'd like to see Microsoft pull back so I could buy it. But that being said, right now we're $1.50 above the moving average. And as a trader, I got to look at both sides of the trade. So if I go to the 1 hour chart in Microsoft, we have our 200 EMA, which is usually very good resistance. And that's still up $2 from here. So I'd love to buy Microsoft on a pullback to get into a trend trade. But if we keep spiking up from here, there's about a 90% chance that this trade is going to work if we get up there for a trade. Okay. Look, guys, I know there's a lot of people out there that don't even know how to short a stock or what shorting a stock is, right? There's a lot of people, and they're afraid to short stocks. Half of the trades that we do are short. And to us as traders, and again, guys, we want everything to go up so that we all become whole in our 401ks and everything. But if you're not shorting stocks as a trader, you're missing half of your trading opportunities. That's the bottom line. And we make just as much money shorting stocks as we do buying stocks. So if you're an active trader, you have to learn how to short stocks. That's the bottom line. AMD, let's take a look. I mean, AMD is rallying with the rest of the market, right? Now let's see where we are on a daily basis. All of these things, guys, on daily charts, AMD, NVIDIA, they're all in downtrends, okay? You look at a daily chart, and we're going back, a month now. I mean, the stock is making lower highs and lower lows. That's what a stock in a downtrend is. So for me to get excited about AMD, right, first we got to clear 110. Then we got to clear 115. So those are two levels we have to clear before I even get excited about thinking, that this thing maybe can start going back. It's good. It's a lot better, but it's in a downtrend. And that's what we have to be looking at. As a trader, I would be looking to short 110 because that is the downtrend line. So again, we always have to be looking at both sides of every trade, period. Dave, would you let me try your room? Yeah, we'll put out my email later. We'll give everybody who's here a free 5-day free trial to come in and hang out with us. Yes, probably Webb. That's a good point. Let me look at UPST, guys. Hold on. Yeah, I think we like UPST there, guys. Everybody still like UPST down there? Yeah, let's do it if it goes fast. 9160 UPST. So I'll explain to you guys what we're looking at in UPST and why we're looking to buy it. Because I know all you guys like to just buy stocks, so we'll take a peek. So UPST traded at 97. 10 minutes ago was 95. And we have our 65 EMA and our VWAP down at 9160. So what should happen is that we should pull back. If we pull back to this 9160, the stock's going to stop going down and bounce up from there for a trade. So if we get in that trade, I'll be looking to make between 50 cents and $1 if it holds those levels. If it doesn't hold those levels, we have a stop order 50 cents below. And that's what we spend our entire day doing, looking for opportunities to buy and sell stocks that set up based on our technical analysis. Let's look at NVIDIA. I think we can cancel that. We're pulling back a little bit. And the SPYs didn't quite get to our... Yeah, so you can see this, guys. If the SPYs would have spiked up for 420, 425, that would have been a nice little trade for, 50, 60 cents. I would love to try your room as well. Good, guys. We'll post my email before we get out of here. Are you trading or think or swim? Or are you executing your trade? No. Think or swim we all use for charting. Okay. And Interactive Brokers is my trading account. See, I have $26,100 in my IB account. So I use IB to execute my trades and think or swim just for charting. Day traded. Yesterday I bought 101. Today I sold 108. Great job, Gregory. Excellent. BFLY. Guys, we usually do not talk about or trade penny stocks. I'm not saying whether it's good or bad. It's just not something that we do for us.
David, do you mind checking to see if you see any levels on Netflix?
Yes. Let's take a look. I just want to see what this VIX's doing. So even this VXX now, right? The market's just making high after high after high after high, and all this thing does is keep going up. Something stinks in VXXXville. Okay, what was the stock? Netflix.
Netflix, NFLX.
Let's take a peek. All right, now 339. You know, whenever somebody asks me about a stock, the first thing I want to do is go to the daily chart and see where we are. So again, look at this, guys. Look how bad a downtrend Netflix is in, right? So, oh, hold on, guys. We just got into a little trade.
Oh, it looks like Upstart might have got filled. We hit that.
Yes. Let's see where we are. Okay, so we got a little UPST. Yep. Where we get? 91.62, guys? Okay, good. So we'll have like a 60-cent stop in this. If it gets back up to like 91.90, we'll start selling a little bit. See if it holds these levels right here. So let's have out just in case, guys. Okay. Again, when the market starts coming in like this a little bit, right? So look, now, let's go take a look. So we see UPST is breaking down a little bit, right? So this is a big level, okay? If we break this 91.30, 91.40, it's probably going to go lower. So what we'll do in this situation now, right? We're in at 91.62. This is what we'll do. If it gets back up there, we want to try to sell half of our trade now because it's breaking down. You see how it broke this level right here? And we'll see what the next move is. So if it gets back to break even, we'll sell a little bit of our stock, and we have a 91 stop. And the only reason we want to sell a little bit of break even now is because it went below our average. And there we go. We just sold a little break even, 91.60. Now let's see what the next move is. So let's put a little out, guys, at like 91.90. Go in that direction. Boom, chaka, laka, laka. So again, that's just a little lesson. When something gets close to us getting stopped out and it gets back to break even, we take a little bit off. Now we need to see a little green bar here, so we probably need above like 91.75. So now our risk is even much less than it was before. Let's see what happens. If we can get above 91.75, 91.80, I think we start turning up from here. So let's see if we can get a little up here, 91.90. Next spot. Okay, what do we want to... All right, there we go. We sold a little at 91.90 now, guys. Boom, chaka, laka, laka. That will bring our stop order up to break even, so we cannot lose money on this trade, right? So our stop comes up to 91.60, and we'll see if we can get a little more out of it. So that's the way that you work into a trade and out of a trade.
Wow.
And now we'll see what the next move is. Yeah, I mean, hopefully we really need this above 92. We need it above 92. And the longer it kind of hangs around here without giving us a nice green bar up, chances are this is going back down and we'll just get out of the trade.
Yeah. So I loved watching you in real time kind of see how you manage that position where it looks like at the beginning it's kind of moving against you for a little bit, but you hold out to see if you get that bounce, which you did, and then you
yeah. So we sold. Correct. We sold half of our stock at break even and half of it for a 30-cent gain. That's it, and we're out of the trade. So now you can see that it's moving down a little bit. So what we'll do in this, I'm not going to totally give up on UPST. What we'll do now is let's go look for another level. I mean, the stock was strong this morning. So you see how we managed that, guys? We got out half a break even and half we made 30 cents on. It just didn't look great. So what do we want to do now? All right. We know the low is 85. I think it'll be a long time before we see a double bottom at 85. But now we'll go to our different time frame charts and see if we have anything between here and whatever it is, $83. So we'll go to a 15-minute. We got nothing. We'll go to a 30-minute. 30-minute, it just tickled at, what was that? Look at that, 91.20. So that was another spot. It just tickled 91.20. It got down to 91.11, and that's giving you a 50-cent trade. You know, we didn't get there fast enough to even look at it, but see, by changing time frame, guys, it gave us another little trade right there at 91.20. Now, if we break these levels, we got a little something, something at 90.90. So this is what we do all day long, guys. SPY, what are we doing? Hold on. No pullback in the SPY whatsoever. Oh, let's look at Netflix.
Oh yeah, we forgot about that.
Yeah,
It's
I mean,
weird because the queues are up right now and Netflix is coming down. What's going on?
that's a great question. There's more people selling it than buying it. So for everybody out there, the only reason that matters when a stock is doing something, okay? If it's going down, more people are selling it. And if it's going up, more people are buying it, right? Our job as a trader is to figure out the spots that we want to buy and sell it, right? I mean, I know this chart looks horrible on a daily level, on a daily chart. I mean, look how freaking bad that is, right? So here's another thing that gets a lot of people in trouble, right? Netflix was a $700 stock, right? Okay. Now it's a $329 stock. It's been cut more than half, right? It's down by more than 50%. And there is no place on this chart that I want to buy Netflix. It really just isn't. Look how bad this is. I mean, maybe on a weekly chart, if we get down to a 20 RSI, I might start buying a little bit, but it just looks horrible. So you want to talk about levels that it has to get above to be positive? All right.
Well, let's just say, like, see if there's anything on the today that we could hit where it would make interesting, because tomorrow, like you mentioned, we have FOMC. We don't know what's gonna happen tomorrow. So
Yeah, I
was
mean,
looking-
here, let's look for a trade, okay? This traded as high as 344, all right? And we have our 65 EMA at 337. That could be a spot to buy it for a trade. And then we got a level below that of 335.50. Me as a trader, if I'm looking at Netflix, I will definitely buy some at 355.50. That's down $3 from where we are right now, and it'll hit a little pivot point. So yeah,
Love it.
I'll look to trade it. Absolutely, 100%. You know, it's coming to our 200 now. Too close here to make a trade right in here. Too close. Maybe to 65 and definitely the pivot point.
All right, so you bounce around. I'll watch Netflix. If we get close to that 337, I'll see if we get a bounce there. If not, I know you like that pivot point below there, so I'll let you know.
There you go. Well, I'll tell you what, we'll put a little marker out. So what we say, 337 for a little marker, and then we got our pivot point below that.
Correct.
So I'll put a little marker out at 357. A lot of times what we'll do, guys, 337, I'm sorry. Whenever we're looking to trade a stock and it's moving a lot, sometimes we'll just put markers out there to let us know it gets to that price, and then we'll look in and see if we want to make a trade in it. We can't short the spiders here, guys. I don't think. Alex, anybody? I don't know. If it's going to back off at all, you know, we're coming right to the daily level. We're kind of on it now. So I don't know if I want to be short the spiders. I mean, the spiders can see 427, 428 today if we really get going. I think we're going to slow down a little bit in the afternoon, and here's what I think. We will probably have some profit taking by the end of the day because the Fed's coming tomorrow. Probably. That's what I would think if you twisted my arm. Apple just ripping. Let's look at Apple for everybody. Oop, hold on. I got someone in my room posting Microsoft. Let's take a peek. 280. Yeah, I love it if we get up there. That's fine. You guys know Apple is my favorite stock of all time ever. I've owned it for a long time, and I will continue to own it for a long time. I was hoping Apple could get down to this weekly level, right? 145. So Apple's kind of sitting right in the middle of everything. 145 would be really nice resistance support, and 162 would be really nice resistance. The spiders tick there already, Ken, at the daily? Yeah, it was like 424 and change, right? Yeah, and just no pullback whatsoever. So the stocks I look for, guys and girls, when the market is when it's getting smacked down, because we know they're going to bounce the hardest on NVIDIA, Apple, Tesla, all those stocks. I got to show you guys Tesla. We missed a trade this morning by 50 cents, and the stock went up $25. Check this out, guys. And we were bidding. We had a bid in Tesla this morning at 756, right? We were bidding there because it went down almost $28 and was going to hit our pivot point at 756. The low was 756.57. So a $700 stock we missed by 57 cents. The stock is up $30. $30 from that spot.
How often do you cheat and just, go a few cents above your pivot point?
We try to on every single trade we do, and especially in a Tesla. But it's rare I'm going to cheat by 50 cents. And a Tesla, you probably should cheat by 50 cents under $1. But, you know, if I missed it by 12 cents, okay. But 50 cents, we're probably not going to cheat. And again, in a $700 stock, you probably should cheat by a little more. But most of our trades, we're going to cheat by a little bit because we find that we miss a lot of trades by a couple of pennies. The SPY is tanking. Yeah, the SPY is tanking right now. Why? So check this out, guys. And maybe it was technical, right? Our daily level on the spiders, this is crazy, was 424.11. 424.11 was our daily resistance in the spiders. We got to 424.25. Check that out. Is that sick? We exactly got to that level. Guys, why did you guys in the room talk me out of that? That was a spectacular trade. Right? Now, did something happen?
Let me check my Benzinga Pro, see if we got a news headline or anything.
All right, some guys are in the trend. Okay, good. That was a beautiful call. Yeah, so here's what I mean about the SPYs and the volatility that we're getting right now. Right? Look at it. And the spiders just went down 2 points.
Yeah, I mean, we could get this could be a repeat of yesterday, and we give back all the gains. Who knows? It looked different for a while, but
everything changes from minute to minute, from second to second. It's just insane. So spiders now, we have a support level around 421.10. So I don't know what this is all about, but 421.10 and then 420.23. So here what we'll do, guys. We'll definitely try to buy a little at 421.10 on a pullback to our VWAP. No, VIXI has nothing to do with the spiders anymore, guys. This is totally disconnected. It has nothing to do with it. I don't know what the hell is going on with that. So the answer is I have no idea. All right, let's put our SPYs up. Let's get a little bit in at 421.20. We'll cheat by 4 cents on the spiders. SPY 421.20. And guys, I trade 50, 100 shares, sometimes 200 shares if I really, really like something. There are people in the room that when I'm trading 50 are trading 500 or 1,000 shares. So it all depends on your experience level, the amount of shares that you want to be trading. You can see we're getting a little bounce from here is. Yeah, VIX is disconnected now, guys, because they stopped issuing shares and you can't short it anymore. So that's why this thing is disconnected. You know, and let's just look at this. Technically, if we get back above this 35.50, it could have room to go back up. So let's look at Netflix, right? We had a little marker at 337. It went below it by almost $1. Now it's back to it. So this is another stock, guys. Now I'd get out of this break even at 337 and then look for the pivot point at 335.50. So let's put out the pivot point. Netflix, 335.50. We'll see if that works down there. Again, I'm just marking this for demonstration purposes. 335.50.
335.50. That's our level in Netflix.
That is the next level, and basically we get out of the trade that we just did at break even because it's breaking down a little bit. SPY bounced. Ukraine not serious in finding solution. That's the rumor, right? Insane. All right, let's wait for the VWAP now, guys, and the spiders. All right, don't jump in anything. Let's wait. Correct, Anya. Look, I'll touch VXX. I'll buy it. If it's going to do another wackadoodle thing like that, and technically it tells me to buy it, I'm going to buy it because I think this thing could go to $50 because it's so disconnected. So technically, if it sets up, I will buy some VXX 100%. That's why this has been so difficult to trade, guys and girls, because what looks great, right? NVIDIA, beautiful uptrend all day. You try to trend and it smacks down $1 against you. So that's why this whole market has been very, very difficult to trade, because when we get moves like this that come out of the blue, it's just a time to cut your size and wait for really, really good setups. That's it. That's all you can do. I have talked to a bunch. Look, I'm doing this 35 years, right? And I have been talking to a bunch of traders that have had an incredibly difficult time this month because of the volatility and the moves that we get for no rhyme and no reason. Spencer!
I'm here, and my mic is
man.
working.
What's up, my friend?
What's up? I want to share a stat that I saw, but give me 2 seconds to find it.
No problem.
I think because today is the 50th trade. Yes, today is the 50th trading day of 2022.
Okay.
And Ryan Dietrich from LPL Financial tweeted the stat the other day. I think it was yesterday. He tweeted this. Yeah. So assuming nothing crazy happens today, this would be one of the worst starts to the year for the first 50 days in quite some time. Maybe not. Maybe I shouldn't say maybe in quite some time, but maybe just in history. So he tweeted this. He tweeted that there are only 3 years where the S&P 500 was down more than 12% through the first 50 trading days. Those 3 years were 2020, obviously, right? 2009, obviously, and 1935.
I was there in 1935. I remember.
I was gonna ask. Do you remember that? So those are the only 3 years where the first 50 days the first 50 trading days were worse than this year. But he ends his tweet with this: the good news that in all 3 of those instances, the rest of the year was up a lot.
Yeah. Look, guys, we are sitting on a powder keg right now. Okay, if we get some kind of resolution, this market's going to go up 2,000-3,000 points in one day. That's what's going to happen. I can't tell you where that's coming from. Okay, and until that happens, this is what we're in store for. We're in store for spiders that go up 10 points and then go down 5 points out of the blue with no rhyme or reason. You also have to put it, and I appreciate his quote and stuff, and that's great. And I do think this market's going to be fine. But what were we up last year? 25%?
Yeah, it was so easy.
What were we up the year before that?
Yeah,
even more.
Okay, so we're up 50% in 2 years, and I know we had the May thing with COVID, but we're up 50% in 2 years in this market. We're down 13% from our all-time highs.
To answer your question, the S&P 500 rose. We'll round up. We'll call it 27% last year. We'll call it 16% the year before that. 29% the year before that. So in the last 3 years, 2019,
72%.
yeah, 2019, 2020, 2021, average annualized returns of like 22% a year. That's really freaking good.
That's insane. That's insane.
Yeah.
Adam, everybody else, do not be trading trend trades when we see the market go down like this. Please. Everything that we were looking at just broke down. Okay? Especially Tesla. Don't be trading this stuff. No, for trades. Guys, I'm just talking to guys in my room that just tried to do a trend trade. You can't do trend trades now, guys, in this market. Nothing has worked for weeks. It's not going to work now.
I mean, you can try, but you probably get stopped out pretty quickly.
You're going to in almost everything that you do. This is look. Okay, I'll say it. This is the hardest market to trade in the last 35 years of my trading. This year, I'll say the last month and a half. This has been the hardest market to trade I've ever seen. Ever seen. So what do you do when things are like that? You cut your size and you try to wait for really, 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 really good setups where you can be a little more aggressive if they set up. That's it. That's what you have to do. And I'll tell you this, anybody else who's out there that's saying they have a good handle on this market, of what this market's going to do on a day-to-day basis, is full of shit. Because it's impossible. You can see the moves that we have. It's just impossible. We'll go to a daily chart of the spiders. Every day almost, we have a 500,000 point range. There's a couple of days where we only had maybe a 300 or 400 point range. But it's just been difficult. And you know what? You gotta go through it to get through it. That's the bottom line. That's it. It happens. It happens. This is a small pull. Yes, it is a small pullback. Net. No question about it. Facebook,
I mean, yeah. So the SPY moved down off that headline from Putin. Is that what
I guess
that
so.
the news is?
Yeah.
I've given up.
I have a good handle on the market. I will sell you my thoughts for $5,000. All right, Joe. Sounds good to me.
Joe.
Only 5,000. That's cheap.
Joe, are you on PayPal or Venmo or Cash App? Just let me know the best way to get that.
My money's on its way right now as we speak.
Actually, do you know what today is? Every day there is a bajillion stupid holidays that make no sense. But today's holiday I thought was fun. One of today's holidays. Today is everything you think is wrong day. So whatever you think, it's wrong. Whatever I think, also wrong.
And that's how most traders have felt for the last month or two. It's the truth.
That's literally what I'm on nationaldaycalendar.com. Today's a bunch of days, but one of them is everything you think is wrong day. So happy Aaron Bree Day, everyone.
Look at oil. Oil just spiked up on that news too. Ripped up oil. And I'll tell you what, when you decide to do the opposite of everything you're thinking is when everything will start working the way it's supposed to work at the beginning.
Yeah.
And that's what will happen.
Every time.
Yeah, it's the old George Costanza, as Brian's pointing out in the chat.
Yes, I love it.
It's true. It's true.
I am going to do the opposite of everything I've ever done. So again, it's just a time to, as a trader, sit back, relax, wait for really, really, really high potential setups.
So David, I think you might have mentioned this before you got before we went live, but you said you were looking at some levels on BABA if we went down to around $71.
Yeah, I'll take a look. Yeah, look, Spence, you got to jump in sometime. I'll tell you why.
What? No, you don't.
All right, I'll tell you why I'm going to. It's all technical. That's all. And again, for me, long term might be 1 day or 2 days, right? So I'm looking to do it for a swing trade. P.S.
That is long term.
Since when is 1 day long term?
Well, if you make 5 or 6 points on a trade, 1 day is enough, right? I'm looking for a reversal swing trade, which is one of our technical setups. P.S. We bought SoFi back yesterday, just so you know. So we're with you, Spencer.
I heard about that. I'm sorry for you, but
why? We already sold some.
Okay. Yeah.
All right, so let's look at BABA. Okay. This is a daily chart of BABA. And actually, it might have happened today. I'm hoping we close lower, but it might have happened today. If you look, today was the first day on a daily chart that the relative strength got below 20. This was the first day. You see my little blue down here, guys, everybody?
Yep. Okay. I can see it.
This was the first day, and look what the stock did today. It stopped going down. It made a low this morning of 73, and it traded at 80. Okay? So this is what we look for when we want to find a reversal swing trade. So let me ask you a question. If we got in this trade this morning, right, and I'm hoping it closes lower to negate this. I don't know if it will or not. It would have to close below 73.28. But technically, a reversal swing trade is when we have at least 3 down days in a row, and we have a 20 RSI on the downside. This is the day where you want to start buying stock. So if you bought stock today, 73, 74, 75, you could have sold it at 79 and 80. We're traders, okay? So if I get into a stock at 73 or 74 and I make 5-6 points on it the same day, that's the end of my swing trade. I swung it for about sometimes an hour or 2 hours, but I'm willing to take 5 points out of the trade. There's people, if you're doing 500 or 1,000 shares and you take $5,000 out of this thing in a couple of hours, what the hell is wrong with that? So that's why I was looking at BABA today. And I'm kind of hoping we close at the lows. If this closes at the lows today, I'll go home with some stock. But today was the day to do it based on technical analysis. Period. Gabish?
Yes, sir. I was seeing if you saw anything on the intraday, like looking at it at a shorter time frame on the 5-minute.
No, I mean, it was a short when it got up to 80. It almost got
hit
to
that
a pivot point at 80. Yeah, exactly.
Yeah. And then it stopped going down right at the other pivot point. Funny how that works.
Down here. Yep. Look at UPST too. Let's just take a look at it, okay? So look what happened when we got into our UPST. We made a tiny bit of money and broke even, and then it went down $2.50 from there. So this is why when you trade, and again, now it's gone up $2, but when you're a trader, you got to take your losses when you're wrong. And also breaking even on a trade is not the worst thing in the world, right?
Not the worst thing, because you can't.
Definitely not.
can't go broke taking profits.
Exactly.
You also can't go broke if you don't lose money.
Exactly. And you can see how Netflix, it held that level.
Well, you can go broke not losing money with inflation at 10%.
True. If you don't make,
if you don't make any money, then you're going to go broke eventually.
You got to at least beat inflation.
It's true.
Which is getting increasingly harder to do.
And there's the rub, right? Is there's very, let's see, the market is down. Most areas of the market, most investable assets, broadly speaking, are down this year. Cash is no place to hide with inflation. Do you buy, do you go out on the yield curve and buy bonds in a rising rate environment?
No.
I mean, they're not going to beat inflation. I mean,
if you have a long-term time horizon, you buy more of the stocks that you like and don't look at them. That's what you do.
Yeah, that's
you guys are young as shit, right? You're worried about what's going to happen over the next 6 months.
David, do you think I look at my portfolio every day? I don't. I have a Fidelity account that I look at maybe once a week, maybe. Right? I pulled it up on Friday. But no, I don't look at this stuff. I haven't bought anything in there. Gosh. Well, I guess that's not true because I bought something 2 weeks ago, or 3 weeks ago. But I bought like 2 things in the last 6 months. Like I don't do nothing's been good. Nothing's been good.
Yeah, but if you have 401ks or any of those other kind of investments, it's good when the market goes down because you're averaging into these things for a long period of time, right? As long as you keep contributing to your 401k, you're going to be fine, guys, in 10 years or 20 years or 30 years or whatever it is. Yeah, I won't be here, but you guys will be fine.
What I always think about is like the last time we had inflation this bad, right? It was the late 70s, early 80s, right? And the stock market very famously had a very bad decade in the 70s, right? The 70s sucked, but the 80s were amazing, right? So the people that got the most benefit of the amazing 80s were the ones that had the most capital that were investing into the 70s. And then when we ripped higher for 10 years from, whatever 82 to 92 or whatever it was with, the Black Monday notwithstanding, or whatever 87 crash notwithstanding, the people that benefited the most were the ones that had the most capital, which were the ones that were investing consistently through the last decade.
That's so, right. No question about it.
Stay the course. It works every time.
That's right. For 150 years, it's worked, guys.
Yep. David Green.
Sometimes it takes a little longer than other times. Yep. There was a period of time for 10 years where the market did nothing.
Yeah. I mean, 2000 to 2000 and 10, 9? So I guess 10. It was the S&P was like the .com peak. It took 10 years to get back there. That's exactly right. It was a lost decade. It was a lost. But then
Nasdaq went to 5,000 and it went to 700. And
and then the people that got the benefit of the last decade were the ones that were the most invested, i.e. they stayed the course for the prior decade. So just stay the course, man. Time in the market is greater than timing the market. That's my favorite saying of all time. I just came up with that just now. David Green joins us every single Tuesday. Check out his room. Links are in the description.
Yeah, guys. Just send me an email. What's my email? dgreen927@yahoo.com. You guys can come hang out with us for a week.
That's his alarm, which means he's got to go.
That's it.
We'll talk to you later. All right. Did you guys talk AMC or did I miss it?
We did talk some AMC.
A little bit.
Yeah, I don't think the chat was too happy with our discussion, but we talked AMC.
Why, you're bearish?
I never said that.
You're bullish? I'm sure.
No, I wasn't bullish.
You're bearish.
I wouldn't even, I don't know. I just said I wouldn't buy it right now. I said I don't
raise your hand though. If you saw the headline, AMC is buying a miner, and you assumed crypto. Because I did. I assumed they were bought a crypto miner.
I saw his tweet, and it was like him in front of bulldozers, so I pieced it together that way. But had I seen the headline miners, maybe I would have if I didn't see the picture. But I was just saying earlier, I think it's a red flag. Anytime a company is trying to do something that's not
makes no sense
in their wheelhouse. It's like if we at Benzinga decided, we're gonna start selling cars on the side, you'd be like, all right, well, obviously your original business isn't doing well.
What do we know about selling cars?
I don't know exactly. What does AMC know about a gold mine?
Yeah, it's gold and silver.
Okay.
Gold and silver. Let's be clear about something. But no, this makes no sense. Guys, think about the things that AMC has done, like from a business point of view.
NFTs
in the last year. So
gold
yeah,
mine.
they're doing the NFTs, right? They're doing the crypto. You know, you can pay using Doge and Shiba and that. They are doing the popcorn, right? They're putting AMC branded popcorn in stores, which cool. They're doing some partnership with Uber Eats to deliver.
I don't understand that.
And then they are. What was the last thing? Oh yeah, they're like trying to get like sports rights, right? So, but they haven't actually.
That's cool.
Got anything yet?
I'll give them that.
And now they're doing this. This makes no sense. Like, I would imagine if you're an AMC shareholder, and if we have any AMC shareholders, please enlighten us in the chat because I'm just trying to guess here. But like, there's no way this can make you feel good, right?
I don't know. I think some people, like at least some of the quote unquote apes that I saw were celebrating it.
Why?
You got to ask them. Not me.
No, that's what I'm trying to do though. Like what? Why? Is it like can they do no wrong? Is that it? Is they can do no wrong? Grizzly, we ain't chilling AMC here. We're doing
wait, HYYC. That's the
trying to do the opposite.
What's the ticker of the stock they bought?
HYMC, I think.
HYMC. Highcroft Mining.
Yeah, HYMC.
Wow, it was up 90% this morning. Now only up 16.
But I mean, this is the reason we we titled the stream with this today, because like this is crazy. This reminds me. You know what this reminds me of?
Kodak trying to become a vaccine play.
Oh, that's a good one. That's actually a better one than I was thinking. I was thinking about long blockchain. You guys remember long blockchain? You guys remember Long Island iced tea? Long Island iced tea announced one day out of the blue that they were no longer going to be an iced tea company, and they were going to be a blockchain company. They were going to be a crypto miner. That didn't work out very well. Kodak making vaccines. Great example. I should point out that Kodak reports earnings tonight.
Oh, really?
Yeah. But
timely.
Let's pull up that Kodak chart. Oh, I wonder when Kodak announced they were getting into the vaccine game. What jumps out to us here? Oh, was it freaking July 2020? Yeah.
Wow, got all the way up to, what was the high?
It got to $60. It is at $4 today.
Yeah, if you bought the top in Kodak, been a tough go.
Anyway, this makes no sense. It's unusual, and I don't know. I know he was on CNBC. I don't know what he said, but it's frankly a little alarming. Like, honestly, if I was an AMC shareholder, I'd be alarmed. This makes no sense. Like, the movie business is hard enough as it is. Now you're investing in the mining in a hole in the ground?
Well, what I think is so silly about it is the timing. I mean, actually, if Adam Aaron just stays quiet this week, AMC probably gets a lot of good press with how much money the new Batman movie's making. The first movie
true.
I remember in a while, how much I've heard.
Well, Spider-Man too.
Is one outselling the other so far?
I don't know. I know it's been performing very well at the box office.
Someone in the chat, let us know. Which is performing? Which performed better opening weekend, Batman or AMC?
I think it's Spider-Man.
Spider-Man.
I think it's Spider-Man, but I can't say for sure.
Spider-Man versus Batman box office. I'm just going to do a quick Google.
Anyway, this is silly. This whole thing is silly. Did we talk VXX at all, Aaron?
Yes, David Green and I talked VXX.
Okay, I haven't checked the price here in like 40 minutes. Wow, it's actually holding up. 33. Okay, how many halts today? How many times has VXX halted? Let's take a look. Go in the Benzinga Pro. Go to my signals tool. Search VXX. What the hell? That's weird. All right, not showing up. But anyway, we can go this way. How many halts today? We're gonna have to count. 1, 2, 3, 4, 5, 6, 7. 6. I think 6. 6 halts today for VXX. For those not following, VXX and OIL are broken. I'll bring that chart up too. These are both Barclays backed ETNs. I kind of explained what this was on live trading today. If you weren't watching, ETNs, basically an ETF. The biggest difference is it's you have the credit risk of the issuing firm, the issuing bank. You're exposed to their credit risk, and if they decide for whatever reason that they want to stop issuing these shares, or if they come into some financial duress, you're subject to the credit risk of the bank. In this case, Barclays announced yesterday that they're going to stop creating new shares of VXX and OIL. That means the instruments are, for all intents and purposes, broken and not going to behave with any logic whatsoever. They can go wherever. There is no one keeping these things in line with their underlying value. The underlying value could be worth 10. These things could go to 100. Or they can go to 0. They probably will go to 0, frankly, at some point. I just don't know when. If you're trading this, good luck. Don't even know how you do it. I guess technically on the VXX, you have a double bottom, which actually coincides with the pre-market low. What's that pre-market low? 29.86.
Interesting how that works out.
And what's the low of the day? 29.89.
Wait, sorry, I just want to steal this for a second and go
Yeah.
to the just gonna pull up the SPY because we did see that dip a few minutes ago. I don't know if you saw the headline, but I guess Putin claimed that Ukraine is not serious in finding a solution. I don't know. We shall see. But
so if I think the opposite of whatever he says, does that mean they are serious? Yes, of course they are. Of course they're serious. What kind of a question? What kind of a thing is this? Of course they're serious.
well, he's probably saying that because he already put the demands out, and he's saying if they didn't just like accept the demands, then they don't want to end the conflict. So it's like his like way of trying to force his demands, I guess. I don't know.
Idiotic.
But we did. So we came down about a little more than 0.5% here. Hit this level right at $420. Got a big green candle, and we're looking okay on the 5-minute chart. I'd like to see us break new highs of the day. Otherwise, we could be in a little double top territory. So just watching SPY on the 5-minute right now. Let's do a quick check in on Tesla. Tesla now up 3.5% today. So good day for Tesla. Let's take a look at this on the daily.
On the daily
Chart, not looking great. Still in this downtrend. I'm not really excited by Tesla here. If I start getting back into Tesla, it would be more around 700 and 800, I think. Although, if I start seeing some consolidation here and us starting to trade higher, that it looks like we may be able to swing back up to the $1,000 level, then I'd be interested. But if we're just hanging out down here, not interested in Tesla. And you guys were talking about Tesla on pre-market prep, right, Spencer?
Yes. What did we say?
What
about
were
it?
Dennis and Joel saying?
What I'm trying to remember.
Oh boy,
dude! I swear I have goldfish memory. I really do. I my memory is really not good. What were we saying about it?
wow! Look at Chevron on the 5-minute chart. We at one point we were down like 6-7% today, and then we hit this level. And in the past hour, we've just been straight trucking higher for Chevron. So, yeah, I mean, there's a lot of going on for these oil stocks right now, right? You have oil prices dropping. People are saying that if China goes into full shutdown again, demand in one of the biggest markets in the world will plummet, so bringing oil prices even further down. And you also have the war, which is bringing prices higher, so you've got these two conflicting things. But energy has heated back up. It was a buy the dip moment for Chevron and other oil stocks. Let's check it on the XLE.
First, I went to Costco over the weekend to fill up, and first time I've ever been to Costco and paid more than $4 a gallon at Costco. Also very smart. Anyone with a Discover card here? Discover sent out an email over the weekend. You know how they do the quarterly cashback promotions?
No.
All right. If you have a credit card that gives you cash back, they will typically change the promotion every quarter.
Okay.
So every quarter you get cash back at restaurants or whatever. Discover's doing gas stations for next quarter.
Yeah.
They smart.
I think my credit card at Bank of America, I get to select like which category I get 3% on, which category I get 2%. And right now I have gas selected for 3%.
Discover's doing 5% cash back on gas stations for Q2.
Oh, that's awesome.
Isn't it?
That's pretty good.
Pretty sweet, right?
It just lowers your cost of gas by 5%.
Heck yeah, it does. What was I about to say though? Oh wait, someone asked in the chat if there's a few questions in the chat I want to get into. Crypto Hunter, was that you that asked about the yes is the answer to this question. Yes, we can definitely. So I think what's going to happen, Crypto Hunter is Raz is going to do like a weekly segment on this show, like a weekly half hour or an hour long segment on this show. He has said he wants to do it. It's just a question of nailing down the timing, but yes, that's going to happen soon. This is a good question too from Nick, I think. Analysts are giving Roblox a positive rating. I guess I guess what he's saying there was they have bullish ratings on the stock and have price targets that are higher than where it is right now. So let me get Roblox on the screen. Let me do that first, and then we can talk more about this. All right, there we go. All right. I own 1,000 shares of Roblox at 55. If you were in my shoes, would you keep holding? So a lot of things to say. First, with regards to the analyst point of view, and we can actually look in Benzinga Pro. You can go to calendar, go to analyst ratings, and let's just search Roblox, and let's just see if Nick is on point here. We have to change the date. We got to start here, but we got to go. Let's just go back. Let's go back here. Okay, we're gonna sort by date. Let's move this way over. Sorry. Let's fix this format here. Okay, so I don't really care about that. All right, so here we go. We have all these ratings sorted in chronological order from analyst on Roblox. Obviously, you really just only need to pay attention to the color, right? Is it green or is it red? Are they bullish or are they bearish? There's more green on than red. That is normal. Sell-side analysts skew bullish across the board. That's generally the way things go. That's why sell ratings are notable, because it's unusual for an analyst. Not unusual, but it's less common for analysts to go against the grain. So you have mostly buy ratings. Okay. Nick is using this as a justification or as a potential justification to hold this stock. I'm going to use this as the opposite. I'm going to use these bullish analysts as a potential justification to sell the stock. Because think about it like this. If you're an analyst and you're at Stifel or Goldman Sachs or BTIG or Needham, and you've got buy ratings, Morgan Stanley, B of A, you got buy ratings on this stock, and it's going down and down and down. What can you do? You can lower your price target, but what else can you do? You can't go higher than buy. I guess you can go like strong buy, or Goldman has their convicted buy list, which is like their highest convictions. But what are you more likely to do? You're more likely to downgrade, right? You can't upgrade a buy, but you can downgrade to neutral or downgrade to sell. And think about it at their very core. What is the purpose of a sell-side analyst? It's to do two things. One, it's to get access to CEOs and CFOs and hear from the company and translate what they're saying. I guess it's three things. It's direct access. It's providing models, projections based on their models, based on what the company says. And it's the third thing is giving their opinion. This is the big thing. Giving their opinion on a stock to the firm's clients. That's what they get paid to do. At the end of the day, that's their job. Give their opinion, their theoretically informed opinion on a stock. What does that really mean? It means if you have a buy rating, it means you're defending the stock to your clients. What happens if that buy goes to neutral or goes to sell? Then that stock loses a defender. You lose someone whose job is to defend you. And now they are no longer defending you. And if you're some big institution or hedge fund and you are relying on so-and-so's analysis and you trust their take, and they go from bullish to neutral or bullish to sell, there's your excuse right there to get out. So this is actually, I think, a bearish indicator that everyone is bullish because there's nowhere to go but down from an analyst standpoint. They're already all on the wrong side of the ship. So if they all start going downgrade, there's a negative catalyst for you. And the stock loses defenders in the public markets. And that could drive the stock lower. So I don't think it's great that all the analysts are bullish. That's not justification to hold the stock. Now, the second point of his question, right? So what do you do with it? Obviously, Nick, I am not you. I don't know you. I don't know your risk tolerance. I don't know why you bought this thing in the first place. I don't know what your ideas were. I don't know if you bought this thing for a long-term investment. Did you buy it for a short-term thing? Did you buy it for whatever? I don't know why you bought it. But I'll give you the same advice that I gave the guy this morning, which is if this position is causing you emotional distress, if you can't take the heat, then sell. That's the sign right there. The emotional heat. If you can take it, then okay, maybe you keep going if you can take it. But if you can't, then get out. That's my honest take. It's at an all-time low. I definitely wouldn't buy more. You don't buy stocks at all-time lows. That's just silly. It very well could keep going down here. I don't know where it's going to go, obviously. If I knew, I would tell you. But if emotionally, if you can't take it, that's your cue. And I saw a really good tweet from Michael Batnick, who is a financial advisor at Red Hole Wealth Management, and I'm a big fan of him and his podcast. And he said that he's over the last couple of years gotten literally hundreds of emails about why, if you have a long-term time horizon, why not just use leverage? Why not just buy some leverage ETF or whatever and buy and hold forever? Because they can go down 50% in your face, and no one can tell you what it's like to lose your money. You have to experience it for yourself. No one else can. You can't mimic that. You can't paper trade your way and pretend to lose money. There's nothing like it. There's no feeling like losing your own money. And it sucks to sit there and watch the chart go down to the right. And no one can tell you what that feels like. So that's why you can't. Using leverage may seem like a great idea long term, but you wake up one morning, you're down 50, 60, 70% in a couple of months. And that's what some of these stocks can do too. Like, that's not just leverage, that's just individual stock, right? But you got to know that going in. That's the game. Stocks go up and down. That's the point.
Yeah, I'm watching tech. Looks like we have been moving lower the past few minutes. Qs are down a little bit. I'd be worried up here if we can't get back up to these previous highs. So I'm looking at the Qs right now. Let me pull up my screen. Looks like we got, it's like high of the day is about 326.93. Currently at 325.86. So only about a buck away. But if we get back up there, I'd be looking. I'd just be very curious because this does look potentially double toppy. If we can,
a little bit
clear up here.
And I'm not here to like shame Nick. I don't know Nick. I don't know his position. Like he said, Nick told us he's got 1,000 shares of Roblox. For all I know, Nick used to work at Roblox and got some shares in the IPO, or I don't know. Maybe he knows someone that works there. I don't know. For all I know, Nick's a millionaire. I have no idea. I don't know Nick at all. That being said, 1,000 shares is, it's not nothing. It's a lot. Well, for me, it's a lot. For you, for him, it's a lot. It's a lot of money. But I don't know Nick's financial situation. It all just depends on you, and that's a cop out. Unfortunately, I'm sorry. It's a cop out, but I'm not going to sit here and tell you what to do with your money. You know what I mean? Like, anyone that tells you what to do with your money, you have to be the one. Like, I can't do it for you. Because then if I'm wrong, you can just easily just blame me. But you don't be in that position in the first place. Tell yourself what to do.
Yeah.
I can only tell you how I would think about it. But I use the emotional test. If I really am getting too emotional and too wrapped up and I'm thinking about something at night, in the morning, in the shower, whenever, that's time. That's time.
Nick, what I'll say about the analyst ratings is you're right in that it's not like they're sometimes analysts do have legitimate reasons they think the stock will go up. I mean, you look at a lot of analysts over time that have been bullish, Apple, Amazon, whatever. Like they have reasons they think the stock's going to go up. But typically analysts have kind of a bullish bias because that's how you get access to the company executives, to information from the companies, and you're kind of beholden to what you know about the company. So a lot of times analysts are bullish companies because it allows them to have more access to those companies. So their reports are more thorough. They get people that are also bullish. They love their reports. They're like, oh my God, look at this note from this guy at JP Morgan. So analysts do sometimes have a bullish bias. With that said, I'm sure there's a lot of reasons Roblox's stock could come back up. I would just implore you to be as try to be as unbiased as possible and try to see both sides. So yeah, exactly. Basically, think a little politics involved.
Don't make your decisions off of what an analyst is saying.
Correct.
Please.
And I'm saying just try to be unbiased in regards to the bull and bear case for Roblox, because Roblox has value down here if things go well for the company. But what I'm worried about with Roblox on the bear side is, what if it is a fad? What if like this past generation of kids loved Roblox, but the next one there's a different game that's the new Roblox?
That's the concern.
So
the two biggest fads, right, are workouts and kids games, right? I just drew that correlation right there.
If you say so.
I mean, I just said it. So.
And I am seeing. Wait. I'm sharing my screen.
No, you're showing yours. I want to add that we're doing an entire segment in about 40 minutes with Direxion about leverage ETFs. So stay tuned for that. We're going to talk more about that and how they work.
Coolio.
Very, very coolio. Okay, so we talked about AMC. We talked about VXX. Did we talk about the airlines today, which are all trading higher?
Yeah, so I think there's a couple different things going on here.
Retail. Look at UAL up 7.25%. Nice day. When's the last time UAL had a good week? Had an up week? Oh, well, a few weeks ago, a month ago. Let's just pull up the Jets. This is the Jets ETF. Let's just go here. Man, I've never owned an airline stock, and I gotta say, like, it just doesn't seem like a good business to me.
Really?
Yeah. It just doesn't seem, because they only make money if their plane is what, like 90% full or more? It's a cost-intensive industry. American Airlines said this morning that they have no outstanding oil hedges on, meaning they are at the mercy of the oil markets right now. And that's how most of them operate. I think Southwest does hedging, but most of them don't. Just Google list of airline bankruptcies.
No, I mean, they...
How many of them do have? All of them, I think.
They're tough.
I think every major airline in the U.S. has filed for bankruptcy. At least once.
I think the airline stocks are interesting because their trends are very... Like when airlines perform well, like pull up Southwest's chart, LUV, and look at like a monthly... And go all the way back to I'm looking at 2013 to 2015. See, I don't know if you're gonna be able to see it because you have Jets up. Which wasn't
fine.
Or I can just share my screen instead. Watch.
There. All right. LUV. Going back to
LUV. These are monthly candles. 2013 to 2015. When an airline gets in a trend, when a stock gets in a trend like this, they become fun to trade. So then you can see it was choppy up here for a while. Obviously, big COVID red candles, then got hot again, now in a downtrend. So I don't know. I agree. Like, airlines are not something that I'd invest in long term. But for trading, I like it.
Okay. Yeah. Trading and investing, two very different things. From a trading point of view, they're having a great day today across the board. So
Look at these monthly candles on Netflix.
Yo, gosh,
This 1 month alone down 29%. Well, I guess it's all like one earnings report, but
Jesus,
still not great.
dude, it's hard. It is hard to buy things when they're going down. It's hard to buy when they're going up, but it's also hard to buy when they're going down.
All right, we hit that level I was talking about in the Qs, where it looked like we were either gonna hit the previous daily highs and break through it, or hit it and hit resistance. We're trying to edge higher.
Wait, I want to go to back to that Netflix chart for a second. This is the downside in saying, oh, I'll just wait till it gets lower. I'll just wait. I missed it. I'll just wait till it comes down, because you don't know how you're gonna feel when in Netflix's case, when you're down $300 in
More.
in 5 months, $350 in 5 months. You fall by more than half.
Yeah, I mean, I'm adding to a Netflix position here.
Really?
Yeah.
All right.
I mean, because
I admire the conviction.
for a long-term investment,
I admire it.
Netflix isn't going anywhere.
And it is not.
Netflix is not going anywhere.
Netflix is not going. Nobody is buying Netflix. Like no company is going to swallow them up.
Well, I don't care if that happens. I'll make money.
I suppose. Netflix is the clear leader in their industry. They got such a head start. They had a 10-year head start. You guys saw the headline yesterday that HBO Max is going to combine with Discovery Plus. Like the rest of these guys, HBO, Peacock, Paramount Plus, Showtime, whatever Showtime's thing is, I don't even know what it's called. They're minuscule. They're minuscule. Disney Plus, minuscule compared to Netflix. And the only companies that really can compete with them, frankly, Disney can, in terms of spending power, because you have to pay to acquire the content and to make it. Disney can compete. Amazon, Apple. That's pretty much it as far as spending capacity. So Netflix is, if you're going to bet on a streamer, you can do worse than Netflix. I'll say that.
Yeah. Oh, Disney's not having a bad day. Look at this.
That's true, Joe. Blockbuster was the leader. But Blockbuster was the leader in an old... So I mean, there's a lesson to learn from Blockbuster, too. Blockbuster didn't evolve. Netflix is going to have to evolve eventually when we're all watching shit in the metaverse, right? I mean, Netflix is going to have to be in the metaverse. Duh. I assume they will be.
If that happens.
By the way, there was a really good article I read in the Wall Street Journal about Oatly, OTLY.
Oh, was it kind of like a hit piece?
No, it wasn't a hit piece.
Oh.
Well, actually, you know what? I bet you if you asked them, they would say it's a hit piece.
I read early on about Oatly before they even went public that it's actually like very bad for you. Very high.
This article was nothing about that.
Okay.
Nothing about the product. Everything about how hard it's been for the company to actually scale up production. Like all the problems and mistakes that they've made trying to scale up production. It focused a lot on the fact that there's like frequently very empty shelves. They talked about Starbucks, who signed a deal with Oatly to, sell Oatly in their store or use Oatly, and within a matter of months, they were out, and they need to go to another supplier because Oatly could not fill the need.
Oh, so Starbucks doesn't use Oatly anymore?
No, they do, but they have other suppliers as well.
Oh, okay.
So basically, it's like Oatly's had a heck of a time scaling up their operations in the U.S. and their manufacturing facilities. That's basically the gist of the article. They've made a lot of mistakes on that front. So the demand is there. That's the good news. The bad news is the execution on the manufacturing has not been there. So all-time low, speaks for itself. But it was a good article. It spoke to like the challenges. Don't assume a lot of times we assume, demand is high, there's a market need, this company is going to fill it, boom, done. But no, they actually have to execute. That's easier said than done. It's really hard to do that. So that was a good lesson, I thought. Anyway, check it out. Okay, it's 12:45. We've had some fun, Aaron and I.
Time for Rob Roy.
But it's time for Robert Roy, who joins us every other Tuesday, to run through his setups, his trades, his fibs, and his lies. See what I did there? I made a pun.
Fibs and lies.
I made a pun.
It took me a second.
I punned.
But it's okay.
I punned.
All right, let's give him the special intro.
Yo, Rob, how we doing? You're on mute though.
Sorry about that.
All good. What's up, man?
Hey, how's it going?
You seem awfully cheery.
It's the weather, man. It's gorgeous outside.
That's well, I shouldn't say that's true because I don't know because I haven't been outside in hours. But okay, I mean it's sunny out where I am, so I'm presuming it's nice. What are you at now? 50s?
We are. We're in the 50s right now. Looks like we're going to stay there for a little bit. Let's see. Right now we're at 58 outside.
Ooh, see, here in Detroit, we are also probably in the 50s, but everyone here knows that we are due for one last snowfall. So it's just a question. It's not a question of if, it's a question of when.
I uncovered all my yard furniture yesterday, so I'm hoping not. Not here.
Alrighty. Let's bring up the charts. Rob, how's your week been going?
Week has been excellent.
Excellent. Wow.
Up to this point. Yeah, we've done well. This has been our best year ever in one of our programs, Power Option Plays. It's been our best year ever. We have not ever hit the numbers that we are now. We're looking at record numbers, number of trades, dollars of trades, all of those. So we're excited. It's working well.
Nice. Best year ever. Well, I have good news. The year is young.
Yes. But so disappointed about Amazon and Google. Listen, it's great that everybody can afford them, but they're not going to move like they were. They're not going to be the trading companies like they were. You'll get some more volume from them, but I don't see them. We're not going to get $50,000, $60,000, $70,000 moves on 10 contracts at $165 a share. It's just not going to happen.
No.
But we'll see. I mean, they'll still be on our list. I think they'll be small enough yet with their float that we're still going to be okay. But I like those bigger dollar stocks. My favorites are Google, Amazon, Booking, Chipotle, Tesla. Those are the big guns that I trade regularly.
Yeah.
So I'm losing 2 of my 5 of big dollar amounts anyway.
Okay, so what else have we traded here? Anything today?
Yeah, we got a couple off today. How do you stay away from Baba? Right? I mean, you just can't.
Very easy. I'll tell you.
Oh, come on, because we're trading options, remember? So it's very easy to take the trade.
Okay.
When you think about it, right? And again, I guess that's the biggest thing, Spencer, right? Now, you know enough about options, but that's the biggest thing with options versus stock. You can short stock, but what's your risk when you short a stock? Your risk is the stock can go up. How high? Unlimited. Right? When I trade a put option, which means I think the stock is going down, if I spend $4 on the option, my risk is $4. So now there are benefits to the stock. If you're buying it, you own it forever, right? You're never in a situation that it expires where an option does. But most of our trades were in and out the same day these days. There's very few things we're holding overnight any longer. We can't. I can't in good conscience go to sleep at night with this type of slop up and down and hope that today I pick the right direction to hold overnight. It doesn't work for me. That doesn't mean others aren't doing it. Some are doing it very well. I'm not the one that goes out searching for all of these great candidates, amazing fundamentals, getting ready to rock. Technically, the chart is like music, art, right? It just speaks to me, tells me this is what I see, based on my my Fibonacci's and the setups that I use. And we take the trades. Do we win on all of them? Nope. We're probably
speaks to you. It speaks to you. What does it say?
Oh, it's a love language.
It says trade me. Trade
it's a love
me.
language. Fibonacci's.
Trade me.
I forget the candidates we went through this morning in the update that I did, but 2 of them with decent gaps gapped right to a fib line, what we call a fibit. It would be one of these black lines that get added in. We don't have any on S&P. Let's see. Google. Trying to remember who's got Fibbits on it. Probably Roku. not SPY for sure. Right, but we've got these additional lines that we add in. Here we go. These are Fibit lines in here, these shorter pink and or black lines. And we gapped right to one of those in pre-market today on one of the stocks we were looking at. And you look back in history, you had to go to 2018 to find that level anywhere. And people are looking at it, traders saying, but why? Why is it there? Because there's a Fibonacci line there. You don't know it's there. Psychologically, you do. Something is stopping it there. And it's the way fibs tend to work. They are, if any of you have used them, guys, they're fantastic. The fibs and lies, my quote is, a fib is a lie, but Fibonacci never lie.
Oh, nice.
Hashtag.
All right, if anyone has any tickers they would like Rob to discuss, drop them in the chat, but with the caveat that Rob trades options. So don't be giving us like HYMC or whatever from this morning. Don't be giving us any crazy thing like that. Give us some with some volume, some with some liquidity, some with a little bit higher price maybe, and Rob can bring up the chart and give you his thoughts on the trade, bullish or bearish, and how he would do it with options.
Excellent. So here's Baba from this morning. This is pivot points. I'm going to shift this over to a 1 minute chart.
Hard to see. Okay, so there we go.
All right. So I'm going to bring it as big as I can get it. So we opened up on the gap down and we had a nice little rise up, right? And then we broke out of that pivot point line. I'm not looking to trade this up on the bearish news of potential delisting. And we broke.
I'm just trying to understand. So this is just today. This is 9:30 onward. Is that what this is?
Correct. These are pivot points that represent just today. So they are yesterday's high, low, and close added up, divided by 3, and that gives us the yellow line. It's a standard pivot point. And then the reds are supports. The little dotted ones are midpoints, and the greens are resistance lines.
Yeah.
So we closed on this candle. You can see I've got a little arrow below it, but we closed on this. On this candle, we closed below for the first time since we got above. And the next candle we retested and started to fail. So I took the bearish entry there. We got a little bit of heat.
These are, what are these, 5 minutes?
They're ones.
These are ones? Okay.
They're 1 minute candles.
So wow. All right. So during that 1 minute there, where you're trying to get above their red support line, you didn't wait for the minute to close.
So here's what I did.
Yeah.
Let me share it with you. So I waited for this close right here.
Yeah, right.
And the close came below.
Sure.
Once we opened up and started to push back down is when I took the bearish entry into the trade. On that 1 minute intra candle. I didn't wait for the close on that. That was intra candle that I took that entry.
Okay.
Make sense?
Yes, I'm with you.
So we took a bearish trade. We bought a put. It was the 80 put is what we bought on there. We took a little bit of heat. It popped up a little. Not much. It's pennies, really. We kind of stayed flat on that doji. The next candle we opened up and we had a big rock down. I didn't use the midpoint to scale out. I just held. And this candle right here was our exit. So we're talking about a move from 75 3/4 down to 73 3/4. So there's a $2.
Why was that your exit? Because that was the next support line?
That's the next support line. Yes.
But you didn't. So it's a little bit hard to see, but so I can't really tell. But did the wick, did that get through that at all? Or it closed above it? I can see that. But so when it closed above it, that was your exit? Or
no, we were just above that line. We were at like 74, I think it was our exit. And we got taken out as it came down near it. So I'm not using that as the actual exit. I'm using that as the support. Somewhere up above that is going to be the exit on it.
Taken out meaning you had a stop in place. You had a hard stop.
We had a hard stop, and in this case, a GTC, a target, because we wanted this one moving down. We wanted this to go in the downward direction. We bought a put option. Right? And those of you that don't trade options, very simple. Think of a telephone conversation. When you want to make a call, you pick the phone up. For a call, you pick the phone up. You think the stock's going up, you buy a call. When you're done on the phone, you put your phone down. With a put, you think the stock is going down. So we bought a put option, long a put, on this position on Baba, and it was about 4 minutes we were in that trade.
Wow, nice.
It was fast. It was
nice 4 minutes there.
Not my favorite way of trading it at all, but it's what set itself up, right? So we take the trade in hand. Facebook was the only other one I did this morning. right? So if we look at a daily chart on Facebook, what happened? Let me try to get rid of some of these from where that gap down came in play. All right. And see if we can't unscrunch a little bit. All right. So this is live candle right here. So we closed up yesterday down here near this 186.5, that horizontal line that I've got there. And that's just been a support for 3 of the last 5 days. We've been there. Okay. Today we gapped up and we gapped right into that 190.22 level. So the key is we draw the 190.22 on our intraday chart, on a 5-minute chart, and then we look at how the stock reacts upon the open, after the open. How does it react off of that 190.22? So you'll see right here, Spencer, I've got this line that now has these white dots on it, right? That upper line. Let me draw to it, make it easier to see. That's the 190.22 right there. Okay. So this is a 5-minute candle. I'm going to convert this over to a 1. And normally I would not be going back and forth. I've got my chart set up here. My 1 minute is the upper left-hand chart, but it's too small for you guys to see it. So I'll just flip it back and forth here. All my lines and everything stay in place. Okay. So if we scroll back to the open of the day, we got this really nice gap up, but Facebook is just not in a bullish bias. And where did it gap? It gapped to 190.22. So it basically said, I ran up a ladder because I had to change the light bulb. I'm not looking, I'm looking down, and I hit my head on the ceiling and I fell off the ladder. And that's exactly what happened here today with Facebook. It ran up the ladder and fell down. So there we go. If we look, we got the breakdown on that first 1 minute candle. And I can bring that one in a little bit better so you can see that a little bit bigger. It's 1, so it just takes a while to, there we go. All right. So this is our first 1 minute candle after the gap up. We gapped up and immediately just dropped, right? Stretched further down. You can see where we came to on the bottom of the wick here. We opened up here, stretched up to that 190.22, and we failed. So off of that 1 minute candle comes the entry. Make sense, Spencer?
I'm with you. I'm with you.
All right, excellent. Down here, you'll see a line at 186.5. That white line, the bottom line that's near the bottom of the screen, that it is a white horizontal line. That's 186.5. That line represents this bottoming pattern that we've put in the last 5 or 6 days. Right in here, that horizontal line. So if we take that and say, okay, that's support, I need to be above that for where I'm getting out of the trade. That's kind of the bottom floor. Did we get there? Yeah, maybe exactly, no less. Our low today was 186.51. Had I used that level, Spencer, 186.51, I never would have been out of the trade because I had it set at 186.50. That's why we go above support and not use support as our exit. And on this candle is where we're taken out of that trade on Facebook.
See,
right at 187 even.
My gut instinct is to always give myself some more breathing room on the downside, just in case the low gets taken out. But that you're doing the exact opposite. What I'm doing is wrong. What you're doing is how you get executed. It's how you get filled, right?
Correct. Remember, we're buying a put option on it, so we want it to go down.
All right, sure. I meant up, but no, but I'm referring to like on my trade. It's the same concept, right? Like when I have a short-term trade on, if I have an obvious out zone support, whatever, I'll give myself some more room. But you're doing the opposite. You're giving yourself some less room because you want to get done regardless. So
I gave more room to the up. When you say more room, so if my support is here and I think it's going down, I don't want to wait for it to get to support. I want to get out before it gets there.
Yeah.
Right.
Yeah.
The expression that I teach with is don't glean the field. Some of you have heard it before. Some of you have absolutely no idea what it means. Basically, the reference it is don't, when you go through the field, don't take all the fruit off the vine. Leave some for the next person, right? Don't try to get out at the very lowest low. I've had one trade in my entire career of tens of thousands of trades that I have gotten in at the very low and out at the very high. And it was pure dumb luck. It had nothing to do with my skill of getting in and out there. It was luck. I'm not trying to get every penny out of it. I want you to think of the trade here, Spencer. Probably one of the best representations, especially in this climate, is, and don't laugh at my drawing, okay? So this is a hamburger. The top one is the bun. The bottom one is the bun. So there's a bun. There's a bun. There's the meat in the middle.
I
right?
think I'm with you. I think I'm with you here.
All right.
All right.
We're not supposed to eat the bread. It's not good for you. Just take the meat out of the middle.
Yeah, but it's
right?
so yummy.
I know. Gluten is it, right? We got this pizza oven in our yard that we're crushing it with lately, but way too much flour going on back there. All I'm trying to do, Spencer, is get some profit out of the middle of this. I'm not trying to rock it. I'm not trying to take this thing for a home run. Home runs are going to happen, but I don't have to chase it to try to make it a home run. Dave Kingman, right? Home run king. He's also a strikeout king. He swung for that fence every time I got up to bat.
That's true.
And had massive strikeouts, right? So we always set our target before we get to support in this case, or resistance if we were going up. If resistance was up at 100, we'd be out at 99, 98, 97, somewhere down below the 100 resistance, the ceiling. Just because like we had today where we missed it by a penny, that we would not have been taken out of this trade. Talk about freaking me out. And I would be too stressed hoping it got to that exact point today. Because I don't sit and watch it. These trades are on autopilot.
All right. A couple questions from the chat. One, these are weekly options?
They're weekly options. Whenever I day trade, I day trade the shortest strike available. Expiration available.
Okay.
So if we're trading SPY, they expire Monday, Wednesday, Friday. If it was a Monday, I'd be trading Monday's options. If I'm trading BABA and it's Friday afternoon at 2:30 p.m. Eastern, I'm trading that Friday's expiration. I plan on being in and out today.
What are your moving averages?
8 and 21, and they are exponential.
Okay.
They're Fibonacci levels. You will find that there is a difference between the 10 and the 20. Not a lot, but from a crossover standpoint, they are more powerful from testing, not from me guessing. From 4.5 million days of back testing, 8 and 21 were the best moving average crossovers you could find.
All right. Let's go to the chat here. There is a few tickers that people had dropped in there, and I want to give them the floor. So let's I have to scroll up though to find here we go. Okay. Let's look at XLE. This is a good one. XLE. Energy.
All right, so energy sector has done well, right, up to this point until last couple of days as energy, oil prices came down as much as they had. So where are we right now? If you look at today's candle, we are down below, just at that green moving average, which is 21. Right, we're just at that 21 moving average. If we close here, that puts me in a neutral bias. So what do I do with this as a trade? Is there anything that I could possibly take, assuming this is a closing candle right now? All right, so what would I do? Well, if we close where we are and we break to the downside, so let's say we get tomorrow, we come up and you know what? Let me make that darker on a white background. It'll be easier to see. All right, so we press up to that 72.79 level and we fail. That's your entry for a bearish trade. 71.04 is support, so I don't have a lot of room in there on this right now. All right, so that's if it's moving bearish. If we get a move to the upside tomorrow and we get a reversal of what we're at right now and we start to climb higher, we come back and retest that 72.79 level, then 74.54 is my target. I would take the entry off of that bounce because I have what we consider to be a clear and concise entry, Spencer. So what this does is concise. I'm in at the right place. If I get in on a bounce off of support, I have the least chance of being wrong. And if I am wrong, if it does go against me, I have my smallest risk in that trade.
Yeah.
Right? Clear means I have nothing in my way. There's no trees, there's no broken down cars, there's no rocks or glass, or there's no moving averages or other fib lines that are going to stop me from getting to that next level. So that's the clear path to my next target, which is that 74.54.
I mean, it makes solid sense to me. If anyone, that's a pretty simple entry exit strategy. So if you don't understand that, let us know. But
pretty straightforward. Listen,
straightforward.
I was a C student in school. We had 800 some odd students graduate my senior year, which was small considering there were 2,000 freshmen my freshman year. We had 800 kids graduate, and I was about 440, right in the middle. So I am not this brainiac. I am not this math guru. I don't have all these degrees. School of Hard Knocks is my only school that I've ever gotten any use out of whatsoever, personally.
Fair enough. All right, let's do some more here. We got a few minutes left. Let's take a look at, where's my chat? Here it is. XLE. Okay, you want to do SoFi? People always ask about SoFi. I own SoFi, so I hate looking at it because this is the only bag that I'm holding in my portfolio. I'm down a lot. I'm okay with that, but it doesn't give me pleasure to look at this chart. So I'm not sure what the options look like here on this. I have no idea, but
yeah. So we can look at the options, and here's our problem that we deal with on it, Spencer. Right? If it's $8 and change, right? So the question is, how much further can it go? It's in a bearish bias right now. So do we really want to try to trade this bullish? You know, that's more of a speculative play. I'm going to take a small amount of money and put it in there, expecting, that it's going to bounce at some point. Nothing wrong with that if that's who you are. I'm not. We grew up with nothing as kids. I work way too hard for my money. I don't trade that way. It's just very tough for me. So if I'm looking at an option on it, your options are not expensive, and they're very tight bid-ask spreads. You know, if I were bullish, this is an option as a day trade. This is an option I would buy. It's a 73 delta, 1,783 open interest, 62 by 64. There's no cost to it. The problem is, how much is the stock going to move? Even with a 73 delta, I need the stock to move 40, 50 cents for me to make any decent premium at all on it. And since SoFi moves about 90 cents, 95 cents a day, can it move there? Yes. Can I take a bearish trade on it? You could, but you just don't have a lot of room on it.
Yeah.
What I mean by that is you're not that far from zero. Until we see a shift in direction, higher lows and higher highs, I would kind of back away. If I owned it, Spencer, and I was underwater on it, I'd look for a bottoming pattern where I can add to my position at some point. But I'm not sure today is that point, because I don't see anything of we're turning the ship at this point.
Yeah, I mean, that's what I expected you to say. So, all right, let's go back to the chat. We'll do a few more. NVIDIA. New NVIDIA.
Me like an NVIDIA. Very much. So NVIDIA, as of this morning, before today's candle, was in a bearish bias. We pushed up. We're right at that 225.65, that red horizontal line. If we do try to push up, I've got a 232 moving average right above my head. That's going to be resistance. So when we talk about clear path, I don't have a clear path to the next line. I've got trees and cars and things in my way, right? The green line. If we did roll over tomorrow, this is on my list for tomorrow already, of if we roll over or if we get a sell-off this afternoon and we break the 225.65, so that's step one, break 225.65, come back up and retest it. Now, I don't have to hit it. We just need to move up towards it. And all I'm trying to do is the break is going to scare anybody that's bullish from today, is going to scare them out, right? And as it breaks, those are gone. As it starts to climb, the looky-loos that are still holding on, like, no, one more shot, and it rolls over, you're going to see mass panic because they saw it break, it retested with a lower high and failed. They're jumping out of that trade, and that's where the bearish entry comes in off of that 225.65 down to 210.60. So I've got 15-point movement potential in there, and this moves 14 points a day. So I've got the opportunity to capture a large percentage of that move just based on its last 13 days of what it normally moves.
All right. So this is the opposite of SoFi.
Yeah.
Right?
Because it's got some value to it. Right? If I go and look at an option on this, on NVIDIA, we've got a 10-point move. Doesn't matter what the price of the stock is. It has nothing to do with how we pick our option. We're bearish. So we're going to look at puts, which is the right side of the screen. We're looking for a delta of 65 to 85, closest to 65. So we have a 68 delta. It's 980 by 995. It's great bid-ask spread. There's 7,000 open interest, 7,600 open interest, which means 7,600 contracts are held in somebody's hands right now, right? So you're not the only person at the party. right? That has a 68 delta. Spencer, I'm going to round it to 70 to make it easy math, right? We're not trying to teach math, just the concept. If you're able to get only 10 points of that 15-point move, every dollar the stock moves, the option's going to move 70 cents. So your option's going to go up $7 in value, and you're only spending, what strike did we pick? 235. You're only spending $10. So you're spending $10 to make $7. 70% rate of return on your money, if you're right. Power of options. Small movement in the stock price
pretty good.
is a magnified movement in the options price.
Pretty good. We have time for like one or two more with Rob here. So let's do. Okay. All right. This one's a little bit off the beaten path. We can do KDP, Keurig Dr. Pepper.
KDP.
Yeah.
All right. So the very first thing I need to do is I need to put a Fibonacci on here. I don't have one. Right. So we're looking for the largest directional move closest to the right side of the chart. Right. And guys, if you want to learn how to do this, Spencer, that tradinglikeaboss.com website we have.
Yeah. Put up on the screen right now.
All right. If you want to learn how to do this, guys, tradinglikeaboss.com, in the middle, today, Fibonacci, today's power indicator. It's free. It's a 3-part series. It gets emailed to you on exactly how to do what I'm sharing with you now. All right. So we've got the fibs drawn in there. We need to go back over to template number 2, which has our moving averages on it. All right. So now we're all set up. When I look at the fibs and the moving averages, we are below our lowest moving average, which means we are in a bearish bias. Right? We're in a bearish bias. So what does that mean? Well, I've got to break. We're right at that 37.13 level. I need to break that 37.13, retest, and fail 36.45 as target. So is my support. I don't have a lot of room in there. That's the only thing. We've got less than $1 of room inside of there, which is tight, very tight. So what does this move a day? This moves about 95 cents a day from high to low. So we've got some movement in there, just not a whole lot. Be careful on this one.
There we go. All right, fine. Last one, Square.
SQ, too hip to be square. All right, this is one of the candidates we have down for tomorrow already that I'm looking at. Again, we've got a confluence now. And what we're looking at is 3 things happening all in the same place, Spencer. You've got the 8 moving average, which is the pink line. You've got the 101.75 line, which is the 0 line on the fibs. And you've got the 100-point level, which we always use on our charts. All 3 of those are very close together. So there's a lot of strength in there. People that focus on fibs are watching the 101.75. People that focus on moving averages are watching the 103.34. And those that are focused on 100-point levels see the 100 there. Well, we are focused on all 3. So there's extra strength there because we know there are 3 different groups of traders looking at that same level or in that zone. So we push up and we close where we are right now tomorrow, which is about 99.5 for today. Tomorrow, if we get a rollover, we're looking at a move down to 89. And guys, when you look at Square for their options, you can find some amazing prices for their options. It's a $100 stock, right? Look at the bid-ask spread. We're looking at 55 by 85, 30 cents in there, 70 by 95, 25 cents in there. So we're looking for a bearish entry, potentially. So we're going to find a delta of that 65 to 85, right? So here's 69. And why do I like 69 versus 65? I've got 12,000 open interest versus 190. A lot more people at the party. 750 by 770. So very low bid-ask spread, 25 cents, 20 cents, depending on the tick, right? And it moves about, we'll call it 70 cents a day, 70 cents per dollar. If we can go from 100 to 90, that's $10. There's another $7 potential move on this trade. And Square moves $10.50 a day. Ironic how we go from 100 to 89. We're right there, about $10.50. That's how powerful Fibonacci are. The wildest average true range tells us how much it moves a day, setting up 13. And we're looking at that next target for where we're headed to next.
Magic. All right. Robert Roy joins us every other Tuesday, tradinglikeaboss.com to learn more. Robert, I guess I shouldn't say I guess keep having a good week and a good month and a good year, because you seem like your year's off to a good start here. So keep on keeping on. We'll talk to you again in a couple of weeks. Enjoy that
Appreciate
pizza
it.
oven.
Thanks, guys. Take care. See you
Alrighty.
soon.
All right. Before we bring on our next guest, Dave Mazza from Direxion, I have a couple of announcements I want to make. Announcement number 1. We've mentioned this before. We will mention it again. The next Benzinga in-person event is not that far away from now, Aaron. And I think you're going.
I am?
All right. I don't know if Aaron is going.
I don't know either.
No one knows who's going. That's the joke. April 20th and 21st down in Miami Beach, Florida at the Fontainebleau Hotel. Beautiful, gorgeous hotel. Right on the water, right on the beach there. That's where we're hosting the event. 2 days, the 28th and 21st of April. Go to bzcannabis.com.
You said there were going to be free samples there, right?
I said that I can't say that there will be free samples
but you
there,
also can't say that there won't.
but I can't say that there won't be free samples. But I can't say that there will be. People are looking at me right now in the office. I'm not saying there will be. I just don't know that there won't be either. I know who will be there.
The only reason I was asking, because if there are, I don't think my mom will let me go.
All right. Anyway, if you want to go to bzcannabis.com. Use the code on the screen. SHOWS30. SHOWS30. Oh, did I get? Sorry, I was off by date. Thank you, Sean. April 19th through the 21st. I'm in. April 19th to the 21st. Use the code SHOWS30. Get you 30% off your ticket. Again, the link, bzcannabis.com. That's the first announcement I want to make. The second announcement I want to make, and this is exciting because I just found this out while Rob was on. I had no idea that this was happening until 15 minutes ago. Do you know about this, Aaron? The Benzinga March Madness stock contest?
I did. Yes.
You did?
I did.
No one informs me about anything. That's fine. Guys, check this out. I'm going to put this link up in the chat. I'm going to put the page up on the screen. We are doing March Madness, but for stocks. Benzinga.com/stock-market. Check it out, everyone. It's up on the screen right now, or it's about to be up on the screen right now. Boom. March Madness bracket, but for stocks. Here are the rules. It's incredibly simple. You vote which stock of the two do you think is going to outperform over the given period. Before anyone gets in on me, I had no involvement in this. Don't ask me about the seeds. Don't ask me about the matchups. I have no idea. Do you know?
Do I know what?
Like
how they were selected?
Yeah.
I don't know how they were selected. Honestly, I don't.
Don't give me grief is what I'm saying. I don't want to hear your complaints about the seeds.
I don't know who designed this, and it's awesome.
It's freaking amazing.
My only feedback, I don't get the point of having to vote bullish on one, bear. Like, you can just vote between the two. I don't get why there has to be 4 buttons for.
Well, because someone has to win. Because one of the stocks.
Well,
has
I know, but I'm saying in like a normal, you could just vote on Tesla or the other stock. You wouldn't.
That's true. Okay, that's good feedback.
Okay.
Anyway, check it out. Benzinga.com/stock-market. I am told we're giving away some prizes to the winners, but I don't know what those prizes are. Unfortunately, we're gonna fill this out. I think on tomorrow's show, or maybe on live trading tomorrow. We're gonna fill this out. So check it out. This is a fun little contest. I just found out about this like a half hour ago. So very cool stuff. Shout out to the team for building this cool page. I'm very excited for that. Now, that being said, it is time for our next guest. And I teased this on last Friday's show. We are starting to do a recurring segment, just like we did on short selling with Trade Zero. We're doing a recurring segment on leveraged ETFs with Direxion, who, of course, is the largest provider of leverage ETFs out there. A lot of questions about how these things actually work, how to use them. So we're going to be doing a weekly segment about this with Dave Mazza, who is Direxion's head of product. And I want to bring Dave on the show right now to talk about it. Dave Mazza, how are we doing today?
Doing well. Happy to be here. What's happening?
Look, Dave got the new extra special intro.
Wow, look at him.
I know. All right, Dave, it's great to talk to you. And again, I sort of mentioned at the outset what we're doing here, but we get a lot of questions about leverage ETFs. And Aaron and I can give our takes and how to use them and or not use them. But you're the guy, right? You're the guy at Direxion that really knows, and your job basically is to talk to people every day, right? Talk to advisors and et cetera, investors, and on how leverage ETFs work, how they're meant to be used, and how, more importantly, maybe that they're not meant to be used, right? So I want to just start here and let's just see how far we can get in a few minutes. I have a chart here that I want to bring up on the screen. This is actually from the Direxion website right now. I want to let's talk about, Dave, let's talk about like what happens underneath these funds on any given day, and how a change in the underlying index, how that impacts the performance of leverage ETFs.
Yeah, no, this is, I think, a great place to start, because at the end of the day, this is simply a mathematical question, and you don't need a PhD in statistics to understand it, but it's important to take this step by step. So let's start here on the left side of the slide on the page with the number one here. This is what the exposure would be at the first day in this example. So $100 of ETF assets. Direxion in this particular fund, and this is a 3 times bull fund, provides 300% of the exposure. $100 equals $300 because of the leverage embedded in the product. Now, if the index in this example goes up by 1%, the ETF assets would increase from $1 to $3. Then the total exposure, the index would imply a 3% gain. However, this particular, what we need to then do is rebalance the portfolio, or to add additional exposure on that daily basis, to go from that initial exposure to what that actually translates to be. So this particular gain, I think, is important for everyone to understand. So we're actually out rebalancing the portfolio, adding that additional exposure. In this particular case, it would be $3 million in a $1 million example.
So can you explain that? So that magnified exposure, right? That rebalancing that you're doing, that occurs at the end of every day.
Correct. So in this example, it's kind of a gain, right? But if the index were to be down, we'd have to sell. If the index were to be up more, we'd have to buy more. So again, one of the things that I can't emphasize enough, and this will, I'm sure, we'll touch on when we talk about how to use the products, is that they're daily vehicles. So the return of the index, whether we're talking about the S&P 500, the Russell 2000, anything in between, is on a daily basis. So we're adjusting that exposure daily.
And that's important. I would note that you guys smartly put the word daily in the names of your funds. That seems to be a not so subtle hint at how they're supposed to be used. But I want to, like, that point about the daily rebalancing, I think, is probably the most important thing here. And when there have been, I've seen stats and studies about, what would happen to someone's portfolio, somebody who bought every open and sold every close in the SPY, and then their friend who just bought and held the entire time. The daily rebalancing, starting from square one every day, that guarantees that the fund will accurately mimic what the index that it's designed to do and attain the leverage it's designed to get. It's not meant to accumulate and compound over time, right?
Correct. It doesn't serially compound
right.
as a buy and hold investment would do. It compounds on that daily basis, and then effectively day 2 is a new day. Day 3 is a new day from there. So yeah, it's really important to understand that. Now again, and I would even emphasize, if markets open at 9:30. If you buy a particular leverage product at 12, your return isn't necessarily going to align, nor would it for a single stock or a single ETF. But again, the returns, because they are amplified, the returns are going to be magnified both positively or negatively.
So you said, the market could go up or it could go down. This is scenario number 2. This is a scenario where the underlying index the market did go down. So explain to us how this is different from what you just explained.
Yep. So, on one hand, a very simple math here again. So I want to emphasize that. So, let's not be scared away by looking at something of this nature. But again, in this example, again, starting $100 in assets, $300 in exposure. And I should have emphasized this before. That exposure, we're doing that, right? So the leverage is embedded in the product's return itself. Then in this case, the index declines by 1%. So ETF assets go from 100 to 97. The exposure in this particular case goes from 300 to 297. But we actually have to sell to match at the close, to match the return of that particular day. So that 97 in assets actually translates into $291 in total exposure. So there's a 3% loss, and then kind of an additional, $3 loss, an additional $6 of exposure that's being sold to get it down to accurately reflect what the performance needs to be on that particular day.
Right. And so I want to clarify here. So this is a 3 times bullish fund that on a day where the market goes, where whatever it's tracking goes down, will go down 3 times as much as that. But let's move on here, Dave. What about the other side of the coin? We've talked about bull funds, how they will behave in a market that is rising and a market that is selling. The inverse though, the bear funds, the funds that give you inverse exposure. It's the same basic math, but can you just walk us through that?
Yeah, exactly. It's the same basic math, but in this particular case, we're taking $100 in assets, giving negative exposure, and the returns would affect on a daily basis would be the same in reverse. But what's interesting here is that we then in this particular case, because the index gained on that day 1%, we're a seller in a bear fund on a gain because we need to match that in this case the 3 times inverse return. So you would be losing more than you would in a traditional ETF, a 1 beta product. But that's again the goal and intention of the product is to do just that.
Yeah. And then I just want to move to the very last example here, which is the bear fund on a day where the underlying market, whatever it is, whether it's like whatever index or sector, on a day where the underlying market goes down, the bear fund goes up.
Correct. So here's where your bear fund trade would have worked, right? So let's for points of overemphasis, $100 in assets here, negative $300 of exposure, 103 assets go up 103. New exposure is 303. In this particular case, though, because the index itself declined, you're getting that additional benefiting from that additional decline. That additional negative exposure goes to 309, minus 309. And again, in this particular example, because the bear funds, again, all products, bull, bear, both in an up market and a down market on a daily basis are doing what they're intended to do, is just knowing going into it, what's the particular objective of that trade. And will the fund meet it? Again, if you're right, or unfortunately, if you might be wrong, but it's a daily investment vehicle, daily trading tool.
I want to show what happens if you were to hold these things over a more than 1 day time horizon, 2, 3, 4 days. The performance can deviate, right? And I think this chart that I have up on the screen now does a really good way, shows that in a really cool way, right? Where it can show that. So in this chart, the blue line is the bullish. This is a financial leverage fund, FAZ. The blue line is the bullish fund. The orange line is the bearish fund. and the black and gray lines are the underlying indexes. Can you just sort of just explain this chart to us?
Yeah, so it's a few different lines here. So thanks for the orientation. But really, what this is intended to emphasize is that, again, if you're using these tools, what I like to say is you could, in theory, own them on more than a daily basis, but you have to make a buy, sell, or hold decision daily. If you don't have the ability to do that, which I think hopefully will be emphasized when I walk through that chart, these might not be the right products for you. If you have the ability to make that daily decision, then they certainly could be part of your toolkit. So yeah, so in this particular example, we're seeing an index. We're seeing the return of a bull and a bear fund on a daily basis. And what happens is on day one, again, that tracking is just as that hypothetical example looked like. And actually on day two, it's relatively close. So here we have FAZ, cumulative return up 11%. Then you have on day two, your cumulative return 16%. The index is up 16%, or in this case, minus 16%. FAZ, the bear fund, had that 16% performance. The difference was 58 basis points. You had a minus 31 on the flip side, on the bull side, because you're already seeing some of that drag. Things really begin to change on day three and then into day four. So here we see the cumulative return getting actually worse, but the FAZ is outperforming because the market is down again, and then we see we see a real drag though, because we go from outperformance to underperformance because we're in a volatile environment. And the last couple of weeks actually are very reflective of what this particular example shows, is that, on a day where returns are relatively modest or flattish, or we have a trending volatility environment where it's not as choppy as we've seen, where you don't see this degradation, you don't see the differences, like day one, relatively close differences, even day two. It's when we get into more extreme examples where you have a large up day followed by a down day, or a large down day followed by a large up day, is where that compounding can work positively for you, or unfortunately it can work negatively for you if you're on the wrong side of the trade.
I really like what you just said. I don't think I've heard that before. You can hold these things more than one day, but you have to make a daily decision. You have to decide every single day: buy, sell, hold. I like that. I don't think I've heard it put like that, but that sums it up, basically. I mean, hey, it's your money. Do what you want, right, Dave? But you got to make a decision every day, right?
Yeah, that's correct. Look, I mean, we provide these tools for traders to be able to take amplified exposure, or have a hedge if they have a lot of single stock exposure in semiconductors and they were concerned about earnings season. There's a lot of different ways to use these products, but if you can't decide, or if you don't have the ability, and that doesn't mean you're a bad trader, it just means you can't look at your portfolio that frequently, then these products might not be right for you, again, because you could be on the wrong side of that compounding. But if you have the ability to monitor it, you can say, hey, I'm going to stay with it because my indicators or my sentiment tells me to do that. But if you don't have the ability to make that buy, sell, or hold, then that's where the challenges can come to bear, because people start seeing real differences in performance when they might have not been expecting that.
If there are any questions for anyone in the chat, we have a few more minutes with Dave, so drop them in there now. But we will be doing this as a recurring segment going forward. So if you'll have more time. Dave, I want to spend a few minutes here just to talk about net asset value and intraday net asset value, NAV and iNAV. Explain what those are and why they're important, and then how they can affect.
Yeah, so they're important for any ETFs, and especially with leverage ETFs, they can be important. But at the same time, as I'll get into, there is some things people just need to be aware of, because there's some, like anything, there's some pitfalls to what iNAV is. NAV, the net asset value, is just technically it's the entire holdings of the fund, but we call that the assets under management. The net asset value is the AUM divided by the number of shares. So you have a NAV, $10, $50, $100. It's kind of equivalent to a stock price. But with ETFs, because they trade on an exchange, the NAV is technically kind of what the books and records say, but the price could deviate from that. We saw some of that, of course, with the situation in Russia. You see that with fixed income products every day. But there's an arbitrage mechanism for market makers to close the gap between the market price and the net asset value. What the iNAV is, it's important for traders because it is a theoretical, but done in a mathematical way, prediction, if you will, or current pricing of what the net asset value is going to be at the end of the day. So, for example, every 15 seconds, ETFs, index providers are pricing at iNAVs for ETFs. And a trader can say, this particular price is deviating from what the NAV might have been. It could be an opportunity or conversely. So what we tend to do is we look at the iNAV versus the market price to say, where do I want to put my order in? Is this something where I want to use tighter, put in a limit order, especially with trading ETFs? Because you can see discrepancies there. So it's really a tool that folks can use. But I would say we can't rely on it in its entirety because it's used, particularly in international ETFs. The iNAV, the tool, the feeds in a particular iNAV for something that's pricing in Asian stocks, for example, if the market's not open, it's not going to be as predictive and as accurate as it might be if a market was open. Like I said, with it fixed income, bonds close at 3, stocks keep trading till 4. So that iNAV is a pretty good prediction of where prices will be in that particular hour. But because it's using that last price at 3, but things could deviate. So This is an area where I think, I really recommend folks reading up on and understanding. Don't get overwhelmed with it because at the end of the day, there's a lot of tools for you to think about your trading, but it is a helpful gauge of where the actual price of an ETF may land at the end of a particular day.
But would you say, Dave, that it is unwise to buy a leveraged ETF or inverse ETF without first consulting the NAV or the iNAV?
Yeah, I would even say any ETF. Now, the most liquid ETFs in the world, your SPYs, your GLDs, things of that nature, there's so much activity in those particular products. The market's almost pricing it for you. But even with highly liquid products, many Direxion ETFs fit into this camp. You do want to check that. You want to know because it gives you more certainty when placing particular trades. So I'd say for 1-beta ETFs, even for your most liquid ETFs, take a look at that before you place a trade.
Okay. We're up against the clock here, Dave. I just want to ask one question from the chat. Matt Peace is asking for Soxl, SOXL. He's just asking why was that split? And this is really just a broader question about why do leverage and inverse ETFs, why do they get split? Or
well, in that particular case, often people think about splits kind of when you have a large share price. Think about Google, Amazon making their announcements to make it more accessible. Yeah. When you do see particularly leveraged bear ETFs get their price too low, we don't want to run into any issues with people trading them from an exchange point of view, because there is listing requirements for particular securities, and ETFs are subject to those listing requirements like a company. So we tend to monitor the situation, and that's why we do these reverse splits from time to time. It's not, some people try to make a bigger deal of them being a market indicator. And oftentimes, if a market has been out of favor for so long, by the time the split comes, it could be a sign that things are bouncing back. However, much of it is really driven by not running into any regulatory issues and trying to stay a step ahead so that people can continue to trade these products in a liquid fashion, even though I know many people love a low share price.
To me, it just seems like more of an admin thing, like to keep them on the exchange. Right?
Correct.
Right. Yeah. All right. Guys, Dave Mazza is managing director, head of product at Direxion. We're going to be doing this segment once a week with him. There's a lot more to talk about here. with regards to leverage and inverse and how they move. So we have only scratched the surface. We didn't even get to like how people use these things. So we'll do that next time. But Dave, thanks for coming on. I'm glad we were able to get your internet working this time. And we'll talk to you again next week. We have a lot more to discuss here. Thanks a lot.
Talk
Dave.
soon. Thanks for having me.
All right. Again, guys, that's our recurring segment we're doing about leverage ETFs with Dave Mazza from Direxion once a week here going forward. We have a lot more to cover on that front. So if you missed it, just rewind 20 minutes and you'll be able to watch it. But AB, I ran over on time there. I apologize.
All good.
All
so
right.
we've got Gav from Wolf Financial is going to hop on for a few minutes. He's got his own little stock competition for March.
Is this Twitter, Wolf Financial?
Correct?
Man, I didn't know he was allowed to leave Twitter.
He is.
Spaces.
You may have seen him on Twitter Spaces, or not seen. Heard.
Yeah.
Heard. But yeah, it's March. Time for bracketology. Without further ado, let's get Gav on the show. See what he's cooking up over there. Mr. Gav, how you doing?
Wait, he's on mute though.
Oh, you're on mute. You want to click that little?
I got you. Yeah, living the dream, guys. Appreciate you having me on. How's your day going?
Pretty good. I mean, first green day in the markets in what seems like forever, but yeah, we've got the first, like I said, March bracketology. Time for
Wait, can I just say Gav, we've never met before, but I'm a big fan of your spaces. I listen when I can sometimes, and I just want to say I'm a big fan of the way that you like do diversified spaces. You're not always talking about like the hot stock of the day. You talk about like real estate and investing and like IRAs and like shit that I care about. So like, thank you for like not just doing spaces on like the hot or like GameStop, the hot stock of the day or whatever. So I appreciate you. Thank you. I'm a fan.
Yeah, that definitely means a lot. We try to, that's kind of the selling point is if you want to be diversified, if you want to understand stocks, but also crypto and options and ETFs and NFTs, you can all come to one place.
Big fan.
So Wolf Financial, if you're not familiar, as Spencer alluded to, you guys do a lot of spaces, very informative, bunch of different topics. I'll drop that Twitter in the chat. What are you guys doing for March Madness?
We are doing something big for March Madness, and this is what really kicked off our account last year. And I actually think I might have been on Benzinga for a few minutes last year. We might have mentioned it, but essentially, when I look at March Madness, it doesn't matter to me that it's basketball or something else. It's just something that brings a ton of people together and incites a passion in them. And you can do that with a number of different communities. And we've seen this bracketology been pulled from the typical college basketball setup to all different areas of life. People do it for office supplies. People do it for food. People do it for everything. But for us, we're investors, right? And traders and all that type of good stuff. And so for me, I wanted to do something where I could bring my community into a place, give them a purpose, mission, kind of something to bring them together. And then of course, have a prize at the top. So we've taken that traditional format that college basketball offers of 64 different things in a bracket going head to head by matchup. And we've refilled it with stocks, ETFs. There's cryptos in there. There's NFTs, there's futures. And the way that it works is rather than having everything decided by asset return, which would be very difficult because the cryptos and the futures and everything's kind of all over the place, it's all based off social sentiment. So the entire thing is one giant Twitter poll. Every single matchup just goes to Twitter, is plugged into a poll, and we say, hey, vote for the one you like best. And we make our way down.
So what exactly is the question? Vote for the one you like best now?
Vote for the asset you like best.
But is there like is like a time horizon thing like for today or for the year?
It is completely subjective to the person, and that is where you lean. And that is the beauty to this is some people like things in the short term, some people like them in the long term, right? And we just let the person decide from their mind. I see two names. What do I like better? That's how we introduce a bit of randomness into this. But where you also have strategy is every single one of these 64 assets has a champion. So I didn't pick these. I went to all these different people. I sent out hundreds and hundreds of DMs to people on Twitter saying, this is something I'm building. I want you to be a part of it. What is your favorite asset that you want to be in this? What stock do you want to be in this? What crypto? So every single one was picked by someone on Twitter. And now they are going to come in and back it when it goes up to fight. So it gets put out in a poll. They go ahead and retweet it, tell their followers, this is why I like this. go vote for it. So it could be a short-term play. It could be a long-term play. It's actually based on the person that picked it. And they're actually going to all come, as you kind of alluded to, onto my Twitter spaces and make full pitches as to why they like that asset, either short or long-term or medium-term, whatever it is. It just allows everybody, regardless of time horizon, style, personality, to participate. And then, of course, the highest scoring bracket, similar scoring to March Madness, wins a $10,000 grand prize. In the currency of their choice, we will do probably
in the currency of their choice.
So the problem is
What?
I can't say currency of your choice anymore, because apparently I was thinking, yeah, US dollars and maybe like Bitcoin and Ethereum and maybe Dogecoin. And then I said that on Spaces and people are like, can we get the Russian ruble? I'm like, okay, like, apparently I can't say currency of your choice. But, in essence. And then we also have a bunch of giveaways along the way. We're doing $4,000 of giveaways each round. So total kind of throughout the rounds, we're doing a $1,000 raffle right now to anyone that signs up on the wait list, because brackets open on Monday, and a bunch more. Just want it to be something for the community to be a part of.
Do we have a link, Aaron?
I was going to ask where we can find
marketmadness.co. Marketmadness.co.
Marketmadness.co. We're going to bring it up on the screen right now.
Yep. Dropping that link in the chat. Gav, I love this. Thing I love about it is it's like so feasible that the championship could be like SPY versus Bitcoin, but it could also be like Dogecoin versus Bored Ape Yacht Club, and I have no clue which is more likely.
Exactly, and that's why we go back to last year, where everybody came into this last year. They'd never seen anything like this before, and people came in with, "Hey, this has to be something that Tesla wins. This has to be something that Bitcoin wins." And then Palantir beat both of them. Went into a championship against the Buzz ETF that nobody's heard about in 8 months because Dave Portnoy.
Oh, the Dave Portnoy. Yeah.
I was thinking about that the other week.
I actually looked at it the other day and like saw how like downtrodden it's been.
I was thinking about that like a month ago.
But Gav, this is awesome. Link is in the chat. Everyone go check it out. Sign up for the wait list. You got about 5 days or so till it starts.
Okay.
I know I will be entering mine, Gav.
I will also be entering.
Yeah, so Spencer and I will be able to go head to head. We'll be able to pull it up on our show throughout the next coming weeks to compare our brackets together.
I'll also put it this way. You will see once the brackets open. Now, of course, my team was responsible for seeding, which is an impossible task because everybody has their own, this, that. So
no, it's true. It's totally true.
It's an impossible task. We did our best. But what we really did try to do was make matchups that we found entertaining. So, for example, I can unveil a few first-round matchups. ARKK is matched up in the first round against SARK. So it's inverse, right? So it's like, what do you like?
I have a feeling I know who's going to win that one right now.
There you go.
If you would have asked me
I don't
6
know,
months ago,
but it's not. You're not voting for who you want.
Yeah, but
you're voting for who you think the people want.
It's a world of what have you done for me lately.
This is meta, man. You're not voting about who you think. You're voting.
All right, Gav. Well, this is awesome. I'm glad you guys set this up. I know I'm signing up. I hope a lot of our audience does as well. And maybe, who knows, if you're not too busy next couple of weeks, maybe we'll get you on for a quick update.
Yeah, I would be happy to come on. Maybe in like 2 weeks, once we have the brackets filled out, I can come on with data as to like what was the most picked. And we can chat a little bit.
You're saying
that.
Once the whole thing is completed, once everything's completed?
No. Once people filled out their brackets.
Oh, okay. So when does the actual voting on Twitter start?
So that's going to be in 2 Mondays. So this Monday, brackets open.
So maybe before that, we can. Yeah, that'd be a cool time to do a quick catch up in between when the brackets are filled out and before the voting starts.
Exactly. And then everything just goes to mayhem.
All right, cool. All right, Gav. Well, we'll talk to you soon. Have a great rest of your day.
All right, guys. Enjoy your Tuesday.
All right, you too.
Hey, I noticed I didn't get a Twitter DM. Did you get a Twitter DM?
I mean, probably. Gav and I are tight, so
probably. What does that mean?
I'm gonna say yes.
All right. What does that? All right.
Gav's the man. Gav and I actually met down in Orlando. I was about to say have a good weekend, and then I realized it's Tuesday.
Dude, how is it only Tuesday?
I don't know. It
makes no sense.
I have no clue.
Whatever.
All right, guys, we're sticking on the theme of brackets. I'm bringing on my man Cowboy, and we're going to be talking not about a different stock bracket. We're going to be talking about the real bracket now.
Thank gosh.
The real bracket,
thing.
The real deal. Spencer, I don't know about you, but I've been going through my college basketball crash course the past couple weeks, where I've just been trying to learn as much as I can about all the teams that I've neglected over the past 3 months.
Not to brag, I don't have to do that. That's what happens when you follow college basketball.
What do you mean you don't have to do that?
I follow college basketball, man.
I'm just.
I actively follow college basketball.
I'm skipping the intro. I'm bringing Cowboy on. Cowboy, how you doing?
Hey, what's happening, guys? How you doing?
It's been too long.
It's way too
Are you
long.
ready? It's March.
I'm ready. I got my brackets in front of me, man. We've been running extremely hot on basketball, specifically women's basketball. I have not lost a women's play in March, believe it or not. I've been 13-0 on women's basketball, in March so far. So I'm ready, man. This is my favorite time of the year. Not
Mine
only
too.
do I feel like I love the college and the upsets, but we're also in NBA. We're getting the purest form of basketball in NBA as well. These teams that are tanking. Teams that are winning, and they're jockeying for position. We're getting the purest form of NBA. We've been absolutely on fire, and I am super stoked about this tournament. And I got winners for you guys. I got teams that there's only 6 teams that can win this thing this year, and I'm gonna give them to you guys.
So let's start small, and then we'll get kind of the bigger picture. Do you have any picks for the games tonight?
Games tonight. I am going against the public. All the money in the world is on Rutgers and on Harper Jr. and everybody loves them. I want Notre Dame. I'm a Notre Dame guy. They shoot the 3 ball, the 3rd best in the nation, and I can get them at a dog. I'm going to take. I think the line is now even. Last I checked, or -1. I love Notre Dame in this position. Mike Bray, amazing coach. He's been out. He's been out of the tournament for 4 years. His first year back. Rutgers had to get them away from home, and they're not that good of a team. So tonight I am going to be all over Notre Dame. I think this is a very mismatch. I think it's very much in their favor. They shoot the 3 ball at a rate that Rutgers cannot match. They both play, though, at such a slow pace that you can see it under here as well. That 132 was quite high, especially for March. Definitely a first half under would be a great look there. Rutgers plays at 289th slowest pace in basketball, and Notre Dame plays at the 250th slowest pace. But the kicker here is Notre Dame is the 20th best team in offensive efficiency. So they're very effective on offense, whereas Rutgers, on the other hand, is not quite that efficient. And their defense is right at average. So Ken Palm has them ranked, right here. Ken Palm has them ranked fairly even. If you guys don't know who Ken Palm is, it's Ken Pomeroy. He's the godfather of college basketball analytics. If you need to know anything about how a team plays on a Tuesday to what when they play at 3:00, he's got the information for you. Doesn't make plays. You got to do that yourself. But he's a sponge of knowledge, and I strongly advise subscribing to his website. Sorry, innocent shill for somebody else other than myself. But he's definitely somebody that you need to follow for all your college basketball insight. And also, this is pretty much a home game for Notre Dame. It's in Dayton, which is only, gosh, I don't have the exact mileage, but it's got to be under 100 miles.
Not too far from South
Dayton.
Bend, yeah.
Yeah, under 100 miles.
I like Notre Dame going into the ACC tournament. I was surprised they got knocked out so early, so I like a little bounce back from Notre Dame here.
Well, you live by the 3, die by the 3. And that's kind of one of those things that this time of year, you got to make your shots. And the defense steps up. But Rutgers' defense isn't so amazing. They're 43rd nationally in defensive efficiency, which isn't bad. Most of that came from a couple home games. They did give up a few points on the road. I'm looking at this as an away game. And everybody I know in the world is on Rutgers. So give me Notre Dame. I'll take Notre Dame all day here.
There you go. What's the other big game tonight? Or the other playing game tonight?
I don't even care because I'm not even playing it. I did my research. This is the game that I wanted to be on, so I'm jumping on this. It's Texas Southern and Texas Community College. Either way, the number 16 seeds are going at it. I can tell you exactly who it is. It is I got it right here. Texas Southern versus Texas A&M Central Coast or CC. Texas Southern's the play here. They're -4.5. They almost won a game last year in their tournament. So, they've got a little more experience. Texas CC was an 8 seed in their tournament. They upset in the Southern Conference to win their tournament. I tell people if you need action, fine. Take the favorite here. I think they're going to win they should cover by 10 or more, but I'm not in love with either team. They're right there. Texas A&M Corpus Christi.
Oh, wait. No,
Texas Southern. Yeah, right there.
Yeah, but the Rutgers game is actually tomorrow night. The other playing game tonight is Indiana, Wyoming.
Yeah. Indiana, Wyoming. Sorry. Yeah. I don't really have a position on that one. I'm trying to stay away. Indiana's the better team on Ken Palm. They rated a higher rate. I feel like that Wyoming kind of faded towards the end of the year. They lost a really close at home game against San Diego State that they had to win the conference championship, for the regular season conference championship, and then they faded after that. So I would be on a position to fade Wyoming if anything, but I think 4 points is just a little too much. So I don't find an advantage on this, and I have no problem sitting on my hands and watching this game. If I were to play something tonight, it would be Texas Southern. You are seeing a huge money imbalance coming in. 55% of the public is on Texas Southern, while 77% of the money is backing them, which typically means that smart bettors and sharp bettors are betting on Texas Southern. So I would follow the money on this one and go with the 77% of the money versus only 50% of the public. But the Indiana, Wyoming, no go. I'm passing on that. I'll just enjoy the game. We've got NBA tonight that I'll probably have a play on, so I'm going to stay away from that one altogether.
Got it. All right, let's look at big picture for the tournament for a second. You mentioned that you said only 6 teams, I think you said, in your mind had a chance to win, has a chance to win?
Yeah, so statistically, 13 since 2002, only one team that hasn't ranked both in the top 25 of offensive efficiency and defensive efficiency has won the national championship. And that was North Carolina in 05 with Sean May and Rashard McCants that year. I'm sure you remember. So they were the only team. So there's only 6 teams that qualify this year under that narrative. Now, numbers are fantastic to look at. They definitely are a guide to get you there. It's just like in the market. You definitely want to take advantage of taking advantage of analytics, but you also have the fundamentals. So purely analytically here, Gonzaga is number 1 in offensive efficiency, 7th in defensive efficiency. They qualify. Arizona's 5 of offensive efficiency, 20th in defensive efficiency. Houston's 10 and 11th. Baylor is 9 and 14th. UCLA is 15th and 12th. And Auburn is 24 and 8th. So those are the 6 teams that meet that qualification. So if you're looking to place a bet on a team to win a tournament, those would be the 6 I would look at. I would eliminate Arizona and UCLA personally. I feel like the Pac-12 was very down this year. It was a very weak conference. So those numbers are easy to inflate. Not all things are created equally. I like Auburn a lot. The SEC was by far and away the toughest conference this year. So I like Auburn a lot. And I like Houston. Houston had a great run last year, and they're looking to bounce back. And they kind of got lazy this year in the regular season. They lost to Memphis twice. Everybody's freaking out over that. They went and smacked them in the conference championship. I like Houston. I think Houston's great value to win this whole thing, and they don't have a very difficult road, in my opinion, to get out of the tournament. I think they have one of the easier roads. Arizona's the 1 seed, and Villanova's the 2 seed. So I think Houston is kind of my sleeper pick to get to the Final Four at least, and potentially win this whole thing as an upset.
Yeah, I love that because that's actually the first time I've heard that about Houston. Actually, a lot of people are taking UAB because UAB has that guy Walker who played really well in the tournament, and people have been liking him. But Houston, I like that pick. So wait, let's just run through those 6 teams real quick. You had Arizona, UCLA,
Gonzaga, Zona, Houston, Baylor, Auburn. Those are the 6 teams that numerically qualify that both fit inside the top 25 adjusted offensive efficiency and top 25 adjusted defensive efficiency. So if you're looking for a champion, that is what a 93% hit rate. A champion has qualified, has met those qualifications. Now, needless to say, we bring that to your attention, and it'll go the way of the dinosaur this year. So,
well, it's still good to know. But
yeah.
I mean, talking about Arizona is kind of interesting because they look really good when they're playing well. But then, like you mentioned, the Pac-12 has been kind of down this year. I mean, Arizona lost to Colorado like a couple weeks ago, maybe. Just a weird team, and a lot of people are really high on Arizona going into the tournament. I'm not that convinced about them.
I honestly don't think they deserve number 1 seed. Personally, I think you should have gave that other number 1 seed to Auburn. I don't care that they ran Rick Shaw in the Pac-12. Like I said, the Pac-12 is a weak conference this year. They have USC, UCLA, Arizona make the tournament, or Colorado made the tournament too. No, they didn't actually. Colorado State made it, right? Yeah, Colorado's out.
Yeah,
they didn't qualify. So you had 3 teams make the tournament, and they're a Power 5 conference. And I am a Pac-12 guy. I'm from the West Coast. I love Pac-12. I live, breathe, and eat Oregon Ducks, basketball, football, everything. And I can tell you,
they had like 5 berths a couple of years, or like 6 maybe even. They had state, you had Oregon State. Yeah, they had 5. I want to say 5 berths a couple of years ago.
It just didn't see the conference just was weak this year. I think I would sell all Pac-12 teams this tournament. They're obviously not going to lose in the first round. They'll probably get by TCU or Seton Hall next round. I think TCU is going to upset. TCU has been playing great basketball. If you guys are filling that bracket, March is about momentum. and TCU's got it. I mean, they've proven they can beat top talent. So they'll get by TCU most likely, but then they're going to run to Houston and have a lot of problems. So I think that's where they're going to see Houston. Their defensive efficiency is going to nip Arizona in the bud, and they're going to say, "Wow, we haven't played anybody to this defensive standards yet," and that's where they're going to follow the tournament is the Sweet 16. So
out of the SEC teams, who do you think has the best chance of making a run?
Boy, Auburn is an incredible team. Kentucky, I like Kentucky a lot, actually, as the number 2 seed. I feel like that they could easily make the Final Four. They're definitely going to make the Sweet 16. They got the easiest path to the Sweet 16 out of all number 2 seeds, in my opinion. Murray State is sneaky good, but they still just don't have the athletes to keep up with Kentucky. Kentucky probably is the SEC team that will make the most noise for me. I have them running into Virginia Tech. Like I said, March is about momentum. And Virginia Tech right now, they just find ways to win basketball games. You can't put a numerical value on that. They're in the South, or East, sorry. You can't put a numerical value on teams that find ways to win basketball games. So how do you grade a Virginia Tech team? Well, they are number 3 in offense overall in the nation. So they do run a great offense. And they just won the ACC tournament, which traditionally ACC is a very strong conference. So if you're winning the ACC tournament, you're doing something right. And as I said, March is about momentum. Why would I jump off the train now? They should get past Texas just fine. Texas is a defensive team. I'll take a good offense over a good defense 95% of the time. And then they get the Murray State, San Francisco. Then they get the Purdue, Yale. Purdue is a team to fade in this tournament. They're 100th in defensive efficiency. They can't guard anybody.
You don't like that 7'5" guy they have on their team or whatever?
Zach Edey? He's offensively, he's fantastic. I watched that Wisconsin game where they lost it, and he couldn't get a rebound. And I said, I've seen enough. You're letting their 6'2" point guard, senior point guard, come in there and get layups. And
someone in the NBA is going to draft him still. I mean, he's like 7'4". Sure. Yeah,
you have to because somebody somewhere knows how to coach that, and it's unfortunately it is not Purdue. So I'm fading Purdue. I think Yale will cover the 15.5. I think it's up to 16 now. I think Yale will cover that. Azir Swain is an incredible offensive player for Yale, and Yale had the best defense in the Ivy League. Now the Ivy League is not the worst conference, but they're in the conversation. So I still think they'll cover that 16 in the first round, but Purdue's getting bumped in the second round, guaranteed. I don't see them beating Virginia Tech. They're not it, man. 100th in defensive efficiency in a defensive conference. So I look for them to get bumped. But SEC, back to your question, Kentucky, give me the Elite Eight, possibly Final Four. Just depends if Virginia Tech stays hot shooting the 3 ball.
All right, well, there you have it. I think that's some great insight, Cowboy. I had no clue about the stat about the teams that have won over the past 25 years have virtually all been in the top 25 in both offensive and defensive efficiency. Of course, we went through those 6 teams. Let me know next week what your schedule is like. Maybe we'll be able to get you on for a quick update after the first round.
Absolutely. Let's do it. And one more quick thing. If you guys are looking for some NBA action tonight, Phoenix and Pelicans, take the under, 231. That's grades out at 222 raw numbers, and they both hit at a 61% under rate in conference play. So if you're looking for something to play tonight, that's a great play. That's something that I'm going to take.
All right. Cowboys taking the under in the Pels game tonight. Heard it here first. All right, Cowboy. Talk to you soon.
All right. Take care. Thanks.
All right, guys. Cowboy from Simba Bets. Visit Simba Bets or SimbaStocks.io to learn more.
We got to hop because we're going over, but we haven't done a crypto update yet today.
Roadmap time.
No, but before we do that, though, real fast here. All right, yesterday was straight red. Today is straight green across the board. And they're buying everything. It just goes to show that crypto is, for now, very, very correlated with tech and with growth, broadly speaking. So Ethereum up 2.6%. Solana up 4.5%. Leaders today are Avalanche, which is up 5.6%, and Atom, which is up, or that's whatever, Atom, Cosmos, whatever you want to call it, up 5.6% as well. None of the largest cryptos in the red. If you want free Bitcoin, get it from Voyager. Go to Voyager. create an account, use the offer code ZING, Z-I-N-G, fund your account with $100 and make a trade. They will send you $50 US worth of Bitcoin. All right, we're done, Aaron Bree. The roadmap is going live. They should be live right now. We've gone long here, so we're going to hop off, redirect this stream over there. Everyone have a great rest of your day. Stay green out there.
Peace, y'all.
Hit that like button.